Hit the like button. Rocket scooter. Yeah, yeah, yeah. Rocket scooter. Yeah, yeah, yeah. Hit the like button. Hit the like. Hit the like button. Rocket scooter. Yeah, yeah, yeah. Rocket scooter. Yeah, yeah, yeah. Hit the like button. Hit the like button. Rocket scooter. Yeah, yeah, yeah. Rocket scooter. Yeah, yeah, yeah. Hit the like button. 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 Rocket scooter. Yeah, yeah, yeah. Rocket scooter. Yeah, yeah, yeah. Rocket scooter. Yeah, yeah, yeah. Hit the like button. Hit the like button. Hit the like button. Hit the like button. Like. Hit the like button. Hit the like button. The like button. Hit the like button. Hit the like button. Rocket scooter. Yeah, yeah, yeah. Rocket scooter. Yeah, yeah, yeah. Hit the like button. 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 The like button. Hit the like button.
Friends, welcome. Yo, what's up, guys? Woo. What's up? Morning. Hit the like button. Yeah. No, seeing on the stream, I'm just like, oh man, you know, I haven't got my Botox done in like, oh man, like 6-7 months now. See my wrinkles starting to show up. I gotta go down that slippery slope, guys. Look sexy for the stream. Woo! But at least I got a fresh do to start the week off. Last week I got a haircut. I've decided. So this, right? The skulls. You guys remember my awesome artwork that I have? I'm thinking I'm gonna do them like this way. I don't know what y'all think. Like, tell me what you think really quick. I'm gonna have to move the so if you guys ever notice, like I've got like crazy cool gadgets. I got like a skull lamp over here. This is it's from Thailand. It's got like little dragons on faces on the side. I guess more like gargoyle with like nose rings, and it's kind of, anyways, cool. You know, always cool shit. So here we go. Tell me if you guys like this over here. Hold up. Like, you know, like up and down like this, like threes. Boom, boom. I don't know. Does that like look pretty cool on the side like that? I really kind of ran out of space because I put the pad, like the you know, the soundproofing like all around here. So there's really like nowhere to put them where you can see them. I want you guys to see them though. There's a light switch right there. So I can figure out what I'm gonna do with that light switch. I'm gonna have to above and below. I don't know. There's really nowhere else to do it because they put that like right there. I don't know. I gotta see my like cool skull artwork there. Have you ever saw the skull artwork that I have there, right? It's like there's 3 of them, but like it's, you know, it's super badass. One of them has sunglasses on, one of them has a tape over its mouth, one of them has headphones on. So it's like a rock and roll version of you know, the monkey thing, the monkey statue, the hear no evil, see no evil, all that. It's too dark, but like to really appreciate, yeah. I mean, I could turn on lights, but I kind of keep it dark in here, like a vampire. I'm going to turn on the lights. Heyo. That's a little awkward with the lights on. I don't know. It's much cooler with the lights off. Well, I'm already up 17,000 pre-market with Tradify. So you guys know y'all like Matt really short. Sorry, Matt shorted last night. The show right at the open. I took that first little short there. That's it. That was such an easy. Oh, I gotta show you guys what him. That was such an easy play. What's up, y'all? Good morning. All right, so I have a new plan with Tradify. I'll detail it with you soon, but it's called Fuck Their Consistency Rules. I got a better plan. I mean, I have to do the consistency rules still, but I'm going to try to go straight to fund it as fast as I can with these guys with the full amount. Now, I've detailed my plan with you guys already. I want to say it too much, but I have a plan. a really cool one. It's legit. Just sort of like, you know, using a little bit of thought to get some of the rules in my favor. Here, 59.79. The idea is 10. 1 second. All right, so the idea is this. I'm gonna teach you guys something you didn't know. You're here early, you get the early bird extra info. All right, so here it is. Trader funding programs. It's not real trading. Okay, that's number one. Doesn't matter how good you do, doesn't matter what stats you do, doesn't matter how much money you make. It's a trading themed carnival game. Okay. The game is slightly rigged in the favor, or sometimes big time rigged in the favor of the game master. It's okay. That's what we sign up for. We know what it is. We're not gonna beat around the bush. Now the goal is, and obviously trading well is part of the game, but it's not just trading well. It's trading within boundaries. Those makes these games hard, right? What short did I take? I shorted NQ right at MHP. That's it. As it approached from the bottom. When we open. Hold on 1 second. Yeah, when we opened yesterday, and then it popped above MHP, I wasn't doing anything, and then I saw it kind of work its way lower, and then bounce against it from the bottom, maybe like 15 minutes after open. I just popped a short, and then, you know me with shorts, it fell very rapidly. I got my 40 points, and I closed out. So I was in queue at the open, about 15 minutes in. So anyways, carnival game, right? It's about trading well. You have to, first of all, trading well is part of it, but that's not even the best part. I mean, the hardest part. You have to trade well to win this, but you can't just be good at trading. You have to actually be good at trading times two. You have to actually trade within these boundaries, which means you have to even be like a grandmaster, not just a master at trading. I can't make this much. I can't lose this much, and I got to drive my P&L. Imagine being so good that your next step is migrating your P&L on a certain path, like choosing what your P&L looks like. You guys are probably like, I just wish I had some fucking money at the end of the month, right? And you're trying to make it in this world of trader funding. It's really hard. And that's why I do it, to prove to you guys how hard it is. It's really hard. And grandmaster like myself, not the easiest either. Right? And so like I've had my ups and downs with this stuff. And so now you get to drive your P&L a certain direction. Like literally, you can only make a consistent amount. Imagine that to win the money in this easier world, quote unquote, you got to be consistent, not just make money. You have to make money at a certain rate. You have to choose when to sit out meticulously, where to enter meticulously, position size meticulously. You can't mess up once for the entire time of your payout window. Now, this Tradeify I've been working on now is a 10-day payout window. You have to be perfect for 10 straight days without messing up once. You accidentally in a trade, the market crashes, that sets you back another pay period. Because if you lose 5,000, you can't make it back the next day or you blow your consistency. So if you take a big hit, you're screwed. You have to add more time to keep going. If news comes out and kicks you the other way and you have a big win, it screws you on consistency. So either way, you can't have blowout wins. You have to dodge the news. You have to dodge the Trump tweets. You have to have perfect position sizing and risk management. You have to wait for your entries and get so lucky that it hits them in pivots to keep your win rate up, to get payouts every pay period. It's hard. It's really hard. So the goal is, and I'm going to teach you guys the trick, because you got to understand, I know there's people out there that YouTube, they've been doing this trader funding thing forever, right? I just started doing this. Last year, I started dabbling with ETF like late into the year. I think like closer to the end of the summer, my first time ever doing this stuff. And then I did their contests, and then I got live, and now I'm like, okay, I'm going to get a live account with all these firms. I'm not doing like sim payouts as long as I can. My goal is to get a live account. I have a list of firms I'm going to work with, and Elite Trader Funding, as awesome as they are, I love those guys. They're so good. This is the first one I got. A live elite count, meaning I trade their money. Not sim funded, but live funded, reserved for the best of the best traders who figure out their system, and they'll move you live so that you stop beating their system. It's like a soft ban. I love it. They all do it. Live is simultaneously a blessing and a ban at the same time. And ask yourself, just as I remind you before I start the stream here, if the traders, quote unquote, that you watch are trading sim funded and they're not getting moved to live, that's all you need to know about their actual talent level and consistency. If you were really making a lot of money net from these firms, you'd be moved to live. So be careful who you watch. One minute here. Or not say, be careful who you watch you think is making money. Oh. Monitor did the monitor thing. Let's play monitor roulette really quick. It's always the last one I pick. Yep. It's always the last one I pick. Yep. I literally pick random numbers and it's always the last one I pick. Isn't that funny how that works? Literally, I pick random numbers and this time it was the second to last one that I picked. How about that? All right, hit that like button. All right. If you spend $200,000 on prop accounts and you made $300,000, but then you brought in $500,000 of business, they ain't moving you to live ever. You didn't make really that much money and you made them a whole lot of money. And so as long as you're making money as an affiliate in the sim trading world and you're not really crushing it in the profits as much as the big payouts you post or whatever look like, you're still not making a lot of money from them because, you know, you're not really showing people how much you spent on the evals. With Tradeify, I made all my money back. I didn't spend like tens of thousands, $100,000 in these evals here. So, new rule. Here's what I'm gonna do. All right. Feeling more downside? Yeah. Today, likely so. Now, again, I'm not betting on trying to take another short. I'm already up 17-something thousand. Like right out the door. My new goal is to hit it hard. And bust the consistency right out the door for my normal plan and keep a big balance in the account and then slowly crawl from there. Instead of trying to work with a small buffer, I'm gonna teach you guys something neat about how this stuff works. In the trader funding world, your goal, literally your goal, is to do the following. Your goal is to remove as many of these rules as you can. I teach one of the best classes in trader funding program ever. Like how to hack them, how to beat them. Okay? So here's the rule. And they're probably going to start making like, I swear, some of them listen to my stream and they learn from me and they make rules. Like I taught everybody in trading how to get around a DCA rule, and now they all got around at the mat rule. So there are mat rules out there because I teach people how to beat the game and they turn around and make the rule about it. You ever know the rule that was like you couldn't DCA in your account, so you would just close your position and then reopen it? And then now they put a timer. You have to wait like 10 seconds. That's the mat rule. So here's another rule. Okay, ready? Your job is to get rid of as many of these rules as you can. These ones that have like trailing drawdown. Okay, trailing drawdown is the cancer rule. Any time you can buy your way out of trailing drawdown, buy your way out of it. They'll be slightly more expensive. In some cases, unusually more expensive. It doesn't matter. Even if it's 5 times as much, you buy the account that it gets rid of trailing drawdown. You know why? Because you're going to fail 10 to 20 times as much with the rule there. You're going to fail a whole lot more. So maybe I secretly work for the prop firms. I don't secretly work for the prop firms. I'm an out of the closet affiliate. I've come out and let you guys know I'm an affiliate, but I don't work for anybody at all. I don't think I'd want to work in a prop firm. My goal is to teach you how to crush shit in the trading world. My goal is not to fail you for money. What do I think of the DGen strat? 14 doubles from 100 is $1 million on 0TT options. Once a month, think it's possible to hit $1 million one time. Ali, well, if you think about the failure rate of trading, you just gave me a math problem, 14. So it's 1 over 2 to the 14th power is your probability of success in a coin flip of doing that. So the odds are staggeringly against you unless you get it right. Now, hopefully you can get it right most of the time. But if you have 14 iterations, right? So like one coin flip is 50-50, right? 1 over 2 to the 0 is 1. Or sorry, it's 2 to the n minus 1. Right? So you're going to do like 2 coin flips to be heads and 3 coin flips to be heads and 4 coin flips to be heads. That's your odds. So it starts to really compound at least 3 or 4 times in a row. On your 0 DTE, you're going to lose it all, right? So, but I think it's possible to win the lottery. But you're going to do better than just coin flips though, right? Yeah. You've convinced me on other talks you can spot you $100. I'll spot you $100 so you can do it. That'd be fun. Dude, if you coin flip your way with 0 DTEs, if somebody do the math here, what is 1 over 2 to the 13th? That'd be awesome. So that is a 0.01%, 0.012% chance. And you can hit $1 million. And you have to treat options like a lottery because the way Black-Scholes works is it's designed to peg options to the risk-free rate so that at any point in time there's an equal probability of you and the person you're trading against making money. That is the price of the option, by the way. The design of Black-Scholes is that at any point in time, the option is a 50-50 shot of you winning at the end of expiration. That's how the equation works. So options literally are designed to be a coin flip by the pricing mechanics. All the Greeks and all the things that reprice them are designed to shift that equilibrium back to like equal prob. So how high do the odds go by using Rocket Scooter? Oh, dude, you don't even need like, you'll make it in like the first trade. Duh. Kidding. Not investment advice. SEC watchdog. Shut the fuck up. I was just kidding. Hopefully Rocket Scooter, you can, hopefully with better indications, maybe your 0.0001 chance becomes 0.0002. So, you know, we'll maybe double your chances of winning a lottery. It's like we get you a second lottery ticket, maybe. I don't know. It's still not going to work out. But at the end of the day, it'll be fun to try. All right. Let's see what we got in the morning. Short I made, already up 17 and a half. This is a new thing I'm doing with TradeFi. Okay, ready? Answer your questions. The rules are get rid of as many rules as you can. Oh, shoot. Yeah, I do. Yeah, I do. Hold on. Yes, I do. I have people asking about the marketplace now. We kind of have like this amazing trader marketplace. We're gonna put WAP in their place. And yeah. So anyways, okay. So what you want to do is get rid of as many rules as you can. And I tell you guys all this stuff. The rules are really bad. They're designed to make you fail. The rules exploit the idea that you don't know how to do position sizing, right? So number one is they give you max contracts. That's way too high. Max contract. That's the rule that gets you. Number two, they have these drawdown mechanics. Usually trailing drawdown is the one that gets you. Trailing drawdown exploits a couple of things. Number one is you don't know how to set a profit target, so you just hold on to your trade and then it zips back down. And number two is you don't know how to trade through volatility. So these two rules exploit the fact that you have no idea how to handle volatility or that other thing. Volatility is the amount at which the market V's around when it's moving. Downward markets have a lot of volatility. Upward markets have less of volatility. So when you're trading short side markets, you're going to experience a lot more failures on number two. All right. On long side markets, you're not. So a long side market, if you take long only trades and trade only bull markets, the volatility is in decay. We tell you that's how you beat the trailing drawdown accounts. I'll tell you that's how you beat the apex stuff. You don't do any shorting at all. Actually, I don't do any shorting really much ever. The rarest case when there is any kind of drawdown I have to deal with, because volatility is the enemy of drawdown. So the idea is anything that you should do as a trader, if they design a rule to exploit the fact that you know how to do it, how to set a stop, how to set a profit target. An example today, if I were to like short right here and exit right there, If I didn't know how to do an exit target properly, and we know that this is a high volume pivot, and I shorted, and then I just like held on to my short, and then it bounced right back up to there, I might have blown up the account even though I made a little bit of money because the trailing drawdown gets you. So it takes into account that you have no control or understanding of your trade and how to adjust due to volatility. So this is obviously volatility right here. The market was like V'ing around and then went right back to where it started. And then you may have like shorted here and now you may be green, but you busted the account because you took a hit and it trailed this way. So trailing drawdown trailing drawdown intraday is the one you need to get rid of. Okay, if you can get rid of that. Okay. Another thing that they do to get you is time in the market. Okay, TIM. TIM is time in the market. There's some statistics and math that go with this. The longer you're in the market, the higher the probability it is that you lose a trade, because every moment you're in a trade, something random could happen to zip the market one way or the other. The more time you spend in the market, the thing that fails you there is, okay, so I'm going to talk about what makes you fail. Max contracts exploits the fact that you don't know how to position correctly. You bet too big, and they're exploiting the idea that you don't know how to bet. Okay, you bet too big. So these are the things they're actually exploiting. It's kind of like I'm a scientist that works for these firms doing research on how to fail traders. Not really, but I'm teaching from the other side. Like hey guys, this is what they're really doing. Trailing drawdown intraday is that you don't know no clue how to set an exit target. So you don't do R&R. You don't know how to set exit. And number two is you don't account for volatility. You have no clue on how volatility works, okay? Number three, time in the market. Number four is going to be is consistency, okay? And then number five is blowouts, okay, blowouts. So time in the market is the longer you're in the market. Time in the market exploits something called the law of large numbers. The law of large numbers states the longer you do something and the more iterations of a thing that you have, the more likely that the statistics go towards the mean. An example is, let me think of something that's not so morbid. I always use the basketball example. I can use a car wreck example, but consistency. So I always say the law of large numbers is this. If you were to challenge LeBron in a basketball game one-on-one, and you were to design the game, gave you freedom to do that, and you wanted to beat LeBron, there's a way to do it. You ask for the ball first, and you ask to have one shot, and that's it. You play to one. And if you get lucky and sink that first basket, you win the game. But the thing is that if you say let's play to 20, LeBron's gonna completely like whip your ass because you suck at basketball. The law of large numbers states the longer you do something, the more it reverts to mean. So examples, you make like 5 free throws in a row, but your average is 30%, which is really low. But if you make 5 in a row, you're not 100% average. The more you do, the more you're gonna miss to meet the average of what you do. So the TIM exploits the fact that you have a low win rate. Your win rate is low. So time in the market, they usually have a like number of days minimum traded. Minimum days. So they create a minimum days rule to exploit the law of large numbers to state that you have a low win rate. So your low win rate, does everybody understand in chat what I'm teaching you real quick before we start the market? Every single thing that you need to do right, they create a rule to attack it. And I'm teaching you those rules right now. We all got it? Okay. So the fact you have a low win rate, the law of large numbers keeps you in the trade. Like, let's keep you here for 10 days, 15 days. You have to trade 20 days, whatever it is. That's to exploit the fact that you might have gone on a 3 or 4, shot winning streak, but over time, you're going to fall back to your 30%. And the longer you're in the market, there's a higher probability that you hit blowouts. So the idea is that a lot of them used to say, don't trade through news because of the blowouts. But we'll talk about that in a second. Consistency rule is exploiting the fact that you have no trade plan, period. You don't know how to stop your trade. No trade plan. So the first one is that the trailing drawdown is that you don't know how to set an exit target. That also is applied here, but you don't know how to do entries or exits or anything. You have no plan for risk and reward. You can't choose to take 1-to-1 trades or 1.5-1 trades because you have no plan to do it. And so number 5 is blowouts. is that blowouts are fought, are basically like when the market moves and you get lucky on a run, or the market moves and you get unlucky on like a Trump tweet. So you get punished both ways. If the market falls really quick, you're basically gonna just lose because let's talk about the upward move. Consistency rules are designed to attack a blowout. If the market moves in your favor and you make 50 grand on a trade, then you don't get a payout because you have to have a certain amount of consistency in that trade. Your highest trade can only be a certain percent of your total. So when that happens, all they do is they add more days to your trading. Oh, you got to trade 10 more days, time in market. So your punishment on holding through a Trump tweet is more time in market. They fuck you over. As the market is random, statistically, you're going to revert to the mean. Your winning streak goes away. So if you bust your consistency, they just throw you back to the wolves with the time in market. Well, that sucks. And the other thing is if you take a big blowout, let's say this. If you had 100K and you've made $1,000 a day and you hit your consistency times 8 and you're already at 108,000 and 109,000 is the goal, okay? And then all of a sudden you take a big hit on a blowout and you lost $5,000. Now you're at 103, okay? Oops, you can't see what I'm saying. 103. You've lost $5,000. Well, you can't just make the $5,000 back another day. To maintain your consistency, you still have to make 1,000. So one day sets you back 5 days. So again, the blowout is attacked by more time in market. So no matter what happens, this casino is rigged so you can't luck into a win. And the number of days you have to trade, all of this stuff is designed to keep you in the market longer because the law of our number states is you're likely to lose because the market's random and you don't know how to plan, you don't know how to exploit or how to account for volatility and things like this. So with that being said, you need to do everything you can to remove the rules. And so you can buy your way out of a lot of them. So the hardest rule that you need to get rid of is trailing drawdown as much as you can. Trailing drawdown, if you can do it. That is the hardest rule. Pay more to get rid of that piece of cancer, okay? This attacks you when you lose. This attacks you when you win. This attacks you on spontaneous volatility. This attacks you if you don't even know how to trade around volatility. This attacks you when you short. Bye-bye. Pay your way out of it. Get end of the day drawdown accounts if they exist. And a lot of firms have them. Elite Trader Funding has them. I think Shake Profit has them. Traderify surely has them. Pay for end of the day drawdown. You have a static account throughout the day that resets that point once a day. Buy your way out of it. Number 2, consistency rules. If you can buy your way out of those, buy your way out of them. I haven't traded with all of them, but I know that if there's a consistency rule, get rid of it. Now, a lot of times the golden prop firm for you is one where you can get out of both of those. And trust me when I say, if there's a firm that lets you buy out of both of those, go in there and make as much fucking money as you can because that firm is going to quickly go underwater and die. Okay? This is a horrible, horrible disadvantage to them. So if you can get rid of consistency rules and trailing drawdown, go there and milk that firm until they go bankrupt. Okay? That's the one. Everyone's like, this firm is better, that firm is better. Don't listen to any of the nerds out there that don't understand this. These two things are the firm that's going to go under. So you get your payouts quick before everyone else realizes that. Okay. Top Step doesn't have both. That's why Top Step, people don't understand why they always say Top Step is the best one or whatever. It's not that they're the best. It's that they have the most exploitable rules and the easiest chance to get through because they don't have those two things. Okay. All right. Number 3, and this is a big one, to attack the time and market. Okay. Time and market. That's the one that gets you pretty much over time. So it's the one that actually gets you more than all of them, but it gets you less frequently because it's like you're 8 or 9 days in, the time and market is what actually got you. Because you're in the wrong trade at the wrong time on the wrong day. These get you every day, but just not as much of a guarantee as time and market. The longer market you stay, you're going to lose. So to attack the time and market, you skip the eval. These are the 3 rules that you do to get paid as fast as you can. Skip the eval. Okay. And then if you want all of these rules, it's going to cost you a lot of money per account. But I'm going to tell you something. skipping the eval, attack the time and market. You don't have to be in the market 5 days, 10 days, whatever days to pass your eval. You go straight to funded. Okay. I'm going to tell you something. You might pay 10x the price for your eval accounts. Literally 10x. Okay. But these rolls make you lose probably 100 times before you win. They suck ass. And I'm going to tell you something. My $2,500 investment into my 5 Tradeify accounts immediately returned my investment on the first 10-day payout. I made that $2,500 back plus some. I took like a $6,000 payout by doing that. So as a rule to you guys, just teaching you. And by the way, y'all know the rule because we don't hit that like button, right? Hold on, I got to play it one more time. Wait, where's the song? Hit the like button.
Hit the like button. Rocket scooter.
Let's practice.
Yeah. Rocket scooter. Yeah. Hit the like button. Hit the like button. Rocket scooter. Yeah. Rocket
So,
scooter. Yeah.
the thing is, another thing is if you can usually buy all 3 of those, let me teach you the other rule. If you can buy your way out of these, the more of these you can buy your way out of, number 4 happens is that payouts are capped. Okay? Payouts get capped. So the thing is that the better you can do, the less you can make. Now, my current experience with Tradeify and ETF, they have different sets of rules. ETF, you can buy the expensive ones to get out at the end of the day. And ETF is also going to a direct-to-funded thing. And ETF has a new consistency kind of rule, which is kind of neat. They all have some kind of consistency rule. But for the most part, you're not going to likely be able to get your way out of consistency with a lot of the firms that have uncapped payouts. If you can get out of consistency and get out of trailing drawdown and skip the eval, your payout should be capped. And if you find the golden goose, which is all 3 of these things are gone and payouts are uncapped, like I said, that firm is going to go under. You better milk them while you can. There's no way that that's a survivable model. So Tradeify capture payouts because their shit's like some of the easiest things I've ever done. Super easy. ETF end of the day drawdown, same level of easy. The consistency isn't as bad there either. But there's an eval stage, you can't skip it. But now they're coming out with the direct to funded approach. I like that idea. So, not that I can give you guys investment advice, but I guess this is paper trading, so I can give you all the advice in the world for it. I will tell you from a perspective of a trader, you might think these $20 Apex accounts are worth burning through 90% off sales and all that. If you get serious and you find a nice bull market, get yourself one of those end of the day drawdown accounts and roll it up in a non-volatile market where most of your trades are long. You're going to pass things flying colors. Volatility's gone. And again, like I said, this is an investment advice because this is paper trading. So I legally in the First Amendment can talk about paper trading all day long because this shit is fake. So do that. That's advice in the paper trading world. Play the paper trading game with your long only, non-volatile, bull side only trades, bull market, get rid of your trailing drawdown, find the one with uncapped payouts, find the one with better consistency, skip the fucking eval, and you'll have the best time. It'll cost you $500, $700 per account. Probably can only get 5 of them. Everybody, hit that like button, bottom right of the screen. Thumbs up, friends. But that's it. You're keeping Top Step afloat yourself. Todd, we really appreciate you, man. Woo. Mathematics or trading? Oh, yeah. That's what we are here. Rock Scooter, you put the mathematicians on this. We got the real shit. All right, so today's setups. Greater market might not be so bullish today. We lost DD yesterday. Well, not lost it, but getting really close. It was like 0.6, but it's still okay. Greater market. So my thing I'm doing with Tradeify right now is the way I'm going to battle some of their stuff. I've got a trick, okay? My trick, instead of babysitting, see, some of these accounts I had to start over. Remember, I told you that. And instead of babysitting the account, so I raced a payout, got the payout, and then the other accounts I had 1 day left, and I went in to hit them hard, and I busted them just because that's what I told you guys I was going to do. When you're racing the payout window, the question is, do you take the risk today or just sit out and wait another 10 days? If you take the risk today and lose, you got to wait another 10 days. If you don't take the risk, you got to wait another 10 days. So it's better to, on a money standpoint, to take the risk because you still have to start over. And it's going to cost you a little money, but it's better to keep going and building profit instead of waiting in these things, because time and market is what kills you. And then the longer you wait, you're just kind of like not making money. So I'd rather not get to like the payout target of $4,500, right? And literally just sit there for 8 days to lock in the payout and then get the payout. That's what struggling trader gurus do, because they're like, oh my God, I made the $4,500. Can't wait to get it. I'm like, I don't care about getting tiny little payouts that the government's going to take, 40% of from me. And that's not even real money at the time. Your take home pay with prop firm is like 50% or less of what you make. Did you know that? The government's going to take close to 40% of that because it's 1099 wages, taxes. You're going to take a 10% profit split with the company. They just take 10% off the top. It's not even real profits. And then the cost of the evals and the cost of the resets and all that. You make 100,000, your take home is probably 40. It's not even really good money. Okay, minus taxes and everything, I almost broke even with the $6,000 payout. It's crazy. So your goal is to get through there as fast as you can, build up a balance and go live where it's real and you're at 60-40 roll. So my trick now with Tradeify, what I'm going to do is I'm saying fuck the consistency. I'm going to play it hard. Instead of trying to go to make 9,000 bucks, right, in 10 days, so that I'm trading like $900 per trade, or 20% consistency, which makes that 1,800, and to try to like drive this boat at like 1,800 to 900 per day. I'm going to try to go for $5,000 a day and make that my consistency roll. 3 to 5K. And so with 5K consistency, let's just do 5 and make it easier. 5K consistency times 10 is going to be 50,000 in that account. I'm going to build a buffer of 50,000 just to get to the first payout per account. So I'm going to try to go for like 250K balance, because why I want to do this is that I do that and I'm consistent. I take the 9,000. Then after that, then I got to walk that 4,500 more. 250, 4, 5,000. I got to make $4,500 in a 10-day window with a magnificent buffer in the account that I am nowhere close to the starting point. And I'm really far away for the other rule I need to get rid of, which is your trailing drawdown, right? I mean, so the end of the day drawdown. Once you get to a certain point, your end of the day drawdown becomes a static account that stays there forever until you hit your zero account. With a fat buffer in that account, I'll never blow up, and I'll guarantee that the minute they notice that I'm making that much money and taking the payouts, then when they give me the funded account, then I get max payout. Because the fear I have is that if you're inching your way to like the $4,500, okay, and you're like slightly over with like 6,000, and these guys are like, all right, let's move this person to live. They give you your payout, and then they give you the rest of it. 1,500 bucks is what's left, and they go, congratulations, here's your 1,500 times 5. Here's your $7,500 live account. What a bullshit prize. So the prop firms at their discretion can promote you to live at any point in time. The goal is I don't want them to promote me to live with a rinky-dink prize of like a $10,000 account. I want to have so much fat in the account that I'm just trading it like it's a real account. And once I collect my 80K payouts, I need $75,000 remaining after the 80K, so that when they move me to live, they have no other choice but to stick to their rules and give me the full prize. So that is what they will give you, up to 15K per account. So my job is I need to swiftly get there, because once you start taking your payouts, they'll start noticing. So I'm going to sneak in there before the first payout on those accounts I reset. You know what I'm saying? So the idea is, before I go and request my first payout, or get to that first payout, I want to rock it so far ahead that I have a huge buffer in the account that the entire time I'm getting payout 2 and payout 3, there's almost zero chance to blow up. If I have a 150K buffer in these accounts. I need to make 154 or whatever. I'm just making up a number. There's no way that's going to go to zero, because at that point, then I crawl. And they just sit there and watch this big balance. And they move me to live. I get the full caboodle. There's verifications to be kosher or tradeify. How can it not be kosher? There's no rule that says you can't trade. This is not trading outside the parameters. The goal is just to not, what they you don't understand is, like, most traders want to get that first payout. I don't care about that first payout. Doesn't matter to me. I have to take it to make it count. But the goal is when I get that first payout, I want to get so far ahead that my consistency isn't the rinky-dink $1,000 per day to inch my way to 9,000 to get your payout and have like 3,000 or 4,000 left over. I want to get my payout and have $40,000 left over in the account. So it's definitely kosher because I'm not trading outside the rules that they give you. You know, I'm just the reverse engineering guy. Everyone, when I told everybody in my stream yesterday, there were people that were like, this is genius. Well, I told them in my Zoom call, because the idea is that if you go too slow, you risk not getting the full amount in the live account. If you go too fast, it just means your consistency has to be the same big every time. If I'm making 3 to 5, then I have to make 3 to 5 every day, which is pretty easy. I'm just gonna be trading 5 to 10 contracts rather than my 1 to 3 that I did. And so the probability is really high that I can blow up faster at the start, which means my first couple of trades have to be the big winning trades that make sense. So I can't be doing any gambling. I gotta wait for my really, really good setups as my first trade. Your current accounts are new and still susceptible to daily drawdown. So I had to reset 3 of them, remember? So when I had all of them were at payout, most of them, 2 of them are like 16,000 profit and consistency. The other 2 were like at like 9,000 and 8,000 profit with 20% consistency. 2 of them traded faster than the other 3. So on that day, remember I told you guys on that day, I go, well, I got to hit payout today. It's the last day. And then I took the trade because CPI was in the way and I knew I wasn't going to trade that day. And then I took a loss and it was like maybe, I don't know, $5,000 or something per account because I had to hit it hard to get to that window. They were like, you need to make, you know, so many thousand more to get your payout. And so I traded it hard and took a loss. And instead of deciding to crawl back, I just reset the accounts to start over with the bigger buffer so that I can do this trick here. So at the peak, like essentially what the goal that it is that if you take the hit, you have to crawl. The thing is, like, if you lose 5,000 in a trade, you can't just make it back in one day. To maintain your consistency, you have to make it 1,000, 1,000, 1,000, 1,000. So when I decided to take that risk, I knew if I took the loss, I just reset it. I could have crawled back from, you know, $3,000 profit or whatever. So I was up in the accounts and then I purposefully reset them and threw them away with 3,000 profits sitting there to start over. Because I want to get the 9,000 window rather than, you know, from scratch and kind of like have them all on the same path. So, and then I had this epiphany last week that I was like, you know what I should do? Because they changed their rules. They're like, if you make 80K profits, we're moving you straight to live. So now they're not gonna move you to live quickly unless you have a huge balance in the account and they see that's gonna happen. So if I get that balance really quick, I may not have to go through 40 days of payout cycles to hit that 8K. Remember, 3 each time. 80 divided by 5 is $16,000, right? At 3,000 a pop, I got to get 6 payouts, which is 60 days to hit their target. So I'd rather, instead of take 60 days to get this to happen, I'd rather have hundreds of thousands of dollars in the first 20, you know, 10 or 20 days. That way I can babysit an account with the balance and just take my sweet ass time, taking only perfect trades, and then guarantee to have that 75K at the end. Matt is starting his big gambler arc. So this is a next level thought process to get away from that daily loss limit as quick as you can. So this is my way to battle that daily loss limit. And there's also a way to not have them prematurely move me to live without the full amount. And it's also a way to minimize the amount that I'm going to spend by reducing time in market. So time in market is one of the bigger things that hits you. So I'm reducing time in market. That's what I want you guys to understand. The quicker you get there, the less you have to trade. So if I have hundreds of thousands in these total of these accounts, I don't have to go in there and trade anytime. I can just walk up and touch it on good days, like the perfect days, and just inch my way forward. I can spend, you know, months doing that. This is with Tradeify, yeah. So every single time, I want you guys to stay at this channel. All these other people you watch are gamblers. They don't really make any money, even though they get payouts. They spend all their money on these evals. Here, I'm going to teach you, I'm going to game the system every time. I'm going to get a funded account as fast as I can with all these accounts. I have a live account with ETF. My next target is Tradeify. I'm going to collect live accounts like the Pokemon cards. I'm going to have one of every type. Today we're going for the water Pokemons. Get the live account first. Too much talking. That's what I'm doing. Trading markets. The stock market's closed. So I wish I could trade the markets right now. The market's closed. Calm yourself down. Calm yourself. I'm going to do it, baby. You know I'm going to do it. It's payouts on account size, but the thing is that, right, so I have to get 80K in payouts, but I have to have 75K left over to go into the live account. After 80K, I still need 75K because that's the max they roll into your thing. So I need 155K is my target while getting the 80K payouts. You nailed it, Ben. I love that you guys know your shit. All right, we're going to have a down day today. It's another down day. Down at the start. Let's just watch, though. DD ratio is likely to be close to half, so we're not going to guess on this one. SPY is likely to be greater than MHP, so we're still kind of bullish-ish. I'm going to guess, but we'll have to see when we open up. So I'm going to say the DD maybe greater than half, but monthly maps were brutal yesterday, and after a day like yesterday, we're not going to be better. So monthly maps are actually bearish on the longer haul. So the market is going to run into maybe 1 or 2 weeks of bearishness, guys. This is not the best bull market setup that we have. So, what my goal is today is this about 270 level is lower DD band. This is likely to be the place I play. If we have overshoots, which we likely will have, this is the ideal long pivot to trade off of. If there is some kind of retrace, now we have there's this level that I'm looking for on the S&P. You guys that are Rocket Scooter, y'all know the drill. We have a level called a run length. 6083 is that run length red line today. I'm gonna draw it up here just in case we get that far on S&P. 6083 and is outside the band. So let's get that level up here though. If there is a retrace, like we have like this one really nice awesome red day that just goes straight up, or green day that goes straight up, it's back down to subsequent days. So today, S&P has a target up there. Let's go ahead and take a look. MHP is way down there, so we're correct. SPY is above MHP, which is good. Let's run liquidity maps. Hit the like button. Yeah. All right. At the open, if you fall, MHP is support. It's a down day again today. There is no support on QQQ, and it's really far lower. So equities pivots we don't have. So QQQ today, let's talk about NASDAQ, basically to have futures pivots. So it's another down day, guys. Man, I can see this right out the door. Now, the only place that there is a pivot to trade from is to take a long off of here, which I probably can if DD ratio is greater than half. And it's less than half. So as I forecast yesterday and guessed this morning, DD is less than 0.5. And you guys should take note of that. It's not a good sign. So 2 of our greater market indicators are bearish. Doesn't mean I'm bearish yet. It takes all 3, but this is another possible down day with volatility. There's going to be some good bull scalps in this, but as far as shorting goes, with the DD ratio less than half, I have to be very cautious taking a long at the bottom band. Now I'll show you the cheat sheet on how this works. With that ratio less than half, I could still take a really solid long off of it. I still don't usually short this market, but this right here, when I hit that bottom green band, I usually long it pretty heavy no matter what. I still err to the bull side under most cases. I'll hit it with more of a medium trade than anything. I might scalp it with a couple contracts when we hit that lower band. So NASDAQ's coming right up. I'm already up 17,000 something today. we should be good. S&P is looking slightly better here. But even, especially in this case right now, in this BSU, there is no setup here to the long side unless there's a breakout here. I let it go, I let it bounce, and then I take the long from there. BSUs do not have red arrows. They're not short setups. There is no shorting today. Not at all. Not for me. So I'm looking to see if there's a possible breakout, a possible support, and ready to go. Now take a look. Remember yesterday's resilience class. What do you guys think? Resilience is less than 0. You know the rule there. The market is likely overpriced at this level. Again, I'm not shorting this. But we need that resilience to go greater than 0 for this market to move. 21,325 yellow. All right, let me do it real quick. We do? Oh, thanks, Simon. That would explain that. Okay. All right. Little divergence here. Nasdaq's doing slightly worse. S&P's doing slightly better. Let me do my alerts here. And let's do monthly map. Just double check. So, right, today, I'd like to get some bull support dips to buy, even though the market's looking pretty gnarly. It's likely to trade down. This pop is likely not to survive. I don't think we get a big breakout. So I'm going to exploit the idea that the market's going down to kind of take a trade off of that. All right, so we are bearish all the way through. If we're trading in this light gray area, it's bear side. Through the first week of March, bearish. Bull side is liquidating also inside of here. So there is no bull support. The bear side is actually getting weaker though. So a little bit of short squeezing is possible. So as we fall 2 or 3 days in there, we're going to get nice green days in the way of falling. But there is no real bull side support until like 2 weeks from now. So this is still going to be some choppy, consolidating, low consolidation, and probably a flush week or two is very possible for monthly maps. Now, we said this for the last 3 days that we might get a flush. It's probably going to get a little worse before it gets better. But it doesn't mean I'm going to be a wuss. I'll still be scared to take some bull setups in here. I'm already up 17,000 something. My target's to get to about 25,000 a day. I'm going to try to get that buffer in the Stratify accounts as fast as possible. So I need to get about 5,000 profit per day. That's the goal. YOLO, back to your other day job. LOL. Ooh, baby. Don't forget to hit that like button, guys. Hit the like button. Yeah, yeah, yeah. Bottom right of the screen, click that thumbs up. You guys like what we do here? Now, a little S&P bull side break. If there is a break on here, there is no upside target on equity side. S&P does have a possible move to upper DD band and red line. So there are tons of pivots to trade on today. If we break through here with any kind of velocity and speed, there's nothing in the way till the upper band. Could be a 40-point rip, could be an 80-point rip, just to recover all this downside. Now, again, we got to be careful with things looking the way they are. If I do take a chase, it's one contract small only if I do anything at all. Yeah, I traded overnight. Yeah, I took the short trade overnight. Let me message somebody real quick. So the question is, I'm going to wait on this. I'd like to see something better to take a play off of. Bulls on bottom is always, and these BSU is one of my favorite setups. It's bulls on bottom to the halfway point between the two. But inside of here, there's no R&R on this. This is only like, 3 points higher on SPY. I mean, on S&P. So I'm going to let this kind of play around. I'd love to see this try to dip, and then I'd like to get a support here to balance it up to run. So here, remember these rules here, we have 88% of days. Actually, sorry. In our back test, 92% of days above there, 8% of days below here. So let me let this overshoot and I'll play off of that. There is no support on SPY until lower. So another thing too is that SPY is about roughly a 20% drop on here. Or sorry, 20-point drop on S&P. That puts us right here at monthly hedge. Okay, good. So one of our best pivot lineups that we do have today is off of here. There's a 90%er there, and this actually lines up with here. So this is a really good setup, and this is also a really good setup. So they line up at the same place, if you can see that. So no shorting today, but I do think we might get a nice little bull relaxed day on this. Things slightly turn better. Resilience is getting slightly better here. It's trying to sell off. I don't know if I'm gonna get a drop. If I do one and take a 20-point hit, that'll be fine. I'm gonna do one and I'm gonna add to it if it falls. That's it. So on this one, what I'm gonna do is I'm gonna take a small trade on the chase. And then stop out if it starts falling back inside of here and then jump back in. So simple as that. Here to here, this is roughly a $2.2 to 1 trade. From here to here. The stop right there. And then this is the big dip. So I'm gonna hit this with one contract. I'm gonna hit this one with like, 5. Like a big one from here to here. So I'll take roughly like $500 or $600 in loss against my win here. Be okay with it. You think ES is my bad luck charm? Yeah. I think this has been an interesting dynamic market. This is not something that we could have forecast. This immediate turn into like a bearish market. So I think we just got unlucky. Roxy price stuck on NQ or ES. Don't get wild connected. Just log out and log back in. You should be fine. So the idea is this is the better setup. Bull zone I always try to take with something. DD is back to being greater than half, which is good. Technically speaking, I should try to trade this, but hedge pressure's in the way. So it's resisting this. A breakout would be really nice to see though. This is that second chance we're going to try to see this move. And if it breaks, it's good. There's nothing in the way. Both Nasdaq and S&P are free to run, which I do like. I'm good. I'm taking it. Nasdaq has some really good eats too. Like, but it's got it more like sandwich stuff. Oh, it's got the sandwich here. But if we get a break run on Nasdaq, we are gonna have some kind of like limitation here at this IP. This is likely where Nasdaq's gonna find some. Hold on, mate. 60 points higher. So yeah, so Nasdaq is gonna have strong resistance there. That's gonna be the hard part to break on Nasdaq. So ideally, what I'd like to do is I'd like to see this trade, which is okay, which is why I put in a small position here. We should be good on that. So Nasdaq is sitting here at this really strong pivot. Yes, here. Resiliences are good, kind of trying to bounce at 0. So we want to see this take a strong showing, but I don't think it's doing it. So in this particular case, I did take the long on this because I have to. Things are looking pretty decent. I need to follow the plan, statistics. I got to follow the trade. My profit goal here, this is what we call the sandwich trade. If it goes, so if it goes, 3 slashes always means if it goes, it's a trade to there. It's pretty solid. If it falls, then I got to scalp right back from there to there. I got 2 really solid trades. I'm kind of in the middle on this. That's why, because I can take a little bit of drawdown on this. I'm going to just do 1 contract. That puts me about $1,000 loss off of my 3,000 wins. So I still going to keep 2/3 of my game in, 2/3 of my profit in the game. Which is good. Rez is trying to make a go for it on S&P. What do you guys think? And look, that's going to play out here. Right at the liquidity pocket. Runs a slightly less than 0, so I might get the full drop. That's about 15 points lower, though. So what I'm going to do is I am going to give it about 5 seconds and cut it, and then go ahead and take the second trade here. It's probably going to dip a little harder. Give it one more couple ticks here. I was trying to take the bulls on bottom run, and you have this yellow line on NASDAQ kind of holding the market. That'd be kind of nice to see that. Very close to our strong pivots. Let's go, let's go, let's go. So about 30 points from lower DD band, though. Looks like for a hot minute, we were bearish. Now we're back to bullish. Ratio's good. Let's hit that bull zone. This is tough, but we'll see. Res is negative, right? So that's the one thing that we're going to have. Now, in this like irrational environment, res may not be a good sign of a leading indicator. We are bouncing around it. The reason res is choppy is because you open flat. This is a rule. Every time you open flat, res is likely to be choppy because stocks are like moving through this box just when they're not really going anywhere. And that creates choppy res. So NASDAQ is trying really hard to hold this yellow line. If it fails, it's a really nasty day. That's why I'm touching it with very little. I'm so far up today, I don't want to risk a lot of it. Yeah, so the ratio is flip-flopping a little bit, which means there's some stocks right on the edge, which is okay. Just put one contract in. NASDAQ's about to hit its first pivot point there. My goal was to just plop one, hold through some drawdown. I thought I want to maybe stop out right about 596. But what I'm going to do is just hang on to it for another 10. I'm okay with that amount and just hold through it. I'd like to see really strong bear zone top. Again, DD ratio is pretty good. S&P likely gets a pivot somewhere in here, which is all right. The problem is I don't... Yeah, so we're still going to come down a little bit. My goal was to lose 1,500 max to keep the lock in some of the profit I do have. But I don't see problem. There's a NASDAQ move here. It'll likely overshoot somewhere in here. Just for funsies, let's maybe do some NASDAQ too. Just to have that pivot and scalp that while I'm hanging on to ES. Tesla cooking out, yeah. You went short instead, you finally win. Crushing it, boy. Have we already tapped the band at all? No, we haven't tapped it yet. it's starting to do that same thing it did last time where the market is like consolidating and pushing lower. So we're going to exploit the fact that we understand the volatility here. VIX is in a bullish liquidity map as well. It's not necessarily the most bullish thing for the stock market. If the VIX is getting higher, then I can expect a really solid overshoot on that pivot. So I'm not going to even chase it at the pivot. Because I'm just in it for one. VIX slowly climbing. That means tomorrow, like, it can be a big nasty day. I don't think today crashes out, but we should see. That's good. Maps are good. Market's still liquid. There's liquidity in here. These are called liquidity pockets. The liquid markets buffer a crash. So if I fall inside of here, like, I always take bull bets in liquidity pockets. I always bet that liquid markets buffer a crash. So that's why on the S&P, I was okay with just plopping one at the bull side and plopping one in here. This is going to be a nice support target to bet that we buffer. So even inside of here, a V-shaped trade will be very worthwhile. So what I normally do is I'll get one and I'll get one here and I trade inside of the pocket. I get my cost basis as close to here as I can. One, in case the market spontaneously rallies, but number two is I bet that liquidity holds and the markets don't crash inside of it. That's why I take this trade every single time. If this ratio is greater than half when we get there, I'm going to hit it pretty hard. So I'll probably throw 2 or 3 more contracts at it. The day's range is going to be tight for the first half. I agree that's going to be tight for the first half. The way that Nasdaq is building right now, it's like building like it wants to crash out and fall. But I agree with you. I think that we're going to be a little tighter at the start. Rather than anything, like I said, I'm way up in these accounts. I put in one contract just to give it some play on this. And I'm going to build inside of this liquidity pocket. S&P does have a MHP target here. MHP resiliences are negative though. So again, it's very probable that that negative gamma on stocks can push us lower. So about 6 or 7 more points here to overshoot. And again, in the state of VIX, I don't try to hit my pivot exactly. I like to build around it. So let's let it overshoot. Roughly here, about 7 points lower puts us right at about 75, give or take. So I'm looking at roughly 59.75 as my entry point on S&P. We'll let it overshoot this. Yeah, everything's lining up like these are strong pivot, strong pivot. I said about roughly 1,500. I decided instead of cutting, I decided to hang on to it because the Nasdaq is really close to its bounce point. And then I was just like, you know what? I'll just hang on to the one. So Nasdaq's overshooting DD band right now. Let it take that really nasty kind of like saucy red candle. Let's overshoot that roughly 75. We're not going to go early on this one. A little overshoot action here. DD ratio is still at half. There's 75. All right. Let's cross our fingers on this one. Let's make sure it doesn't flush. Let's watch Nasdaq really quick. That's a really nasty overshoot on Nasdaq. So if there's a bounce point, it's here and that's it. So I'm going to see what I get. I'm playing right on the edge. No more red. Come on. No more red. So I'm playing with the profits I made today. And I'm going to see if I can get this one lucky bounce here. Let's see if I nailed it. So I've upped my range I'm trading. I'm trying to do like $3,000 to $5,000 days. So my drawdowns are going to be bigger and my position sizes are going to be bigger. Just FYI. So now we got the overshoot. Now I got that 75 target. That's kind of where I wanted to see this. This is brutal market, man. And I'm also like 10 points away from my next entry also. My question is, do I want to do that? Come on, turn around. Ratio's good. And the overshoot is big, but... Let's go. 75. 75. Let's go. There was a really nasty flush off of that bear zone, though. Let me scoot this up so you guys can see this better. I always bet that liquidity pockets will buffer a crash a little bit. And inside of this, this is usually the bet I like to take. So we got the overshoot at MHP. There's going to be a green candle right here in just a second to test it. And if it just keeps falling, then I am very perplexed about this market. So let's see if we survive the test and see what happens from here. So typically, you're going to get a test of the zone. In the middle there is roughly a liquidity pocket. So let's see. Do we survive the test, boys? Do we survive the test? Do we survive the test? There's the green candle. God, it's like I write a script for the market. It's like I just write the script for the market, don't I? Is it like again, here's the green candle. Do we survive it though? I don't know if we survive it. But isn't it cool when I say it and it happens? It's like so crazy. Consumer confidence. Oh shit, there's a catalyst coming out. Motherfucker. All right, you know, I need to kind of like not be in such a heavy-handed position. I am so sleeping on this right now. That consumer confidence number is going to wreck my fucking face off. Did I do a good job with this? Like, is this that I draw the little arrow right here? There's the green candle. Do we survive the CD greater than half? We're good. Should I just like risk it for the biscuit with the cat? Oh, look at that, a Bob green. Ooh. 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 Lower, trim out one, trim out one. All my cost basis. Okay, now we'll hold two. Let's let her rip. Now I got my cost basis right at 75. This is like trading 101, boys. Now hold on. I have a catalyst that's about to come in here and like an event's come out 4 minutes and ruin my life. So let's get another bounce. Oh, man. So, all right. So how did I do? By the way, can you guys rate my trade? Did I do all right on this one? Now, again, my cost basis is lower and I got an event coming through. It's a dice roll. And should I play the dice roll? I don't know. So the idea is that I bought one. I bought two more. My cost basis is literally here. It fell through the overshoot. I drew an arrow that said we're going to go there, and if we survive this with declining volume or above this side of the pivot, our market's likely liquid. Now, on the event, it could just do this and I'm dead. Why am I trading ES over NASDAQ right now? S&P has two pivots that line up. This is 90%. probable that we stay on the same side of that. This is 90% probable that we stay on the same side of that under ideal conditions. So when S&P has two pivots that line up, number one, S&P resilience is more closer to zero or closer to zero than NASDAQ. So S&P is the stronger of the two today. And NASDAQ is out of bounds. So while they're both going to be trading kind of similarly, NASDAQ is kind of out of bounds right now. So that's the one problem with NASDAQ. So I got to be careful. NASDAQ's going to move a little quicker. And when NASDAQ is moving quicker, especially when market's falling, especially when I try to buy a dip, I don't like to trade NASDAQ because of that reason. News in a minute. Yeah. So like I said, I'm at the bull zone and the market can do one of a million things. These consumer confidence number comes out in 1 minute. So the market's probably going to go ape shit. Rip these accounts though. If I lose it, I lose it. If I die, I die. It was an honor playing with you boys. Let's hope that liquidity looks sexy solid. I'm trading for about 2-to-1 trade. I think I can hold some drawdown. We are within a good buffer of area right here because those numbers just came out. Market looking for some bad news here. 98.3 on 102 estimate. That's a miss. Does the market care? Or is the market like, whatever, we don't care? Let's hold that bull zone, baby. Come on. The market's going to die on this. Boo. Come on. We got DD band as our last little pivot here. 75. This goes about 67 is another low. I did trim, take some risk off the table. So we'll see what we get. Market inching slightly lower here. This is another strong pivot on the S&P. Always love trading this one right here. Like I said, all the pivots are like really nearby on the S&P. That's the one weird thing. They're all like right next to each other. Again, let's let it overshoot. There's NASDAQ is just like shitting the bed today. Now S&P roughly has a scalp back up to 80 from here for adventurous longs. I'm probably going to just keep this because it's a little volatile. I don't want to add to it just yet. This was my other contingency plan, was to hook it right there to trade. But man, I might just like... Oh, S&P, hang on, baby. And then again, coin flip. Nobody can guess the news event. I decided to play through it. I'm okay with the risk on the table. I'm all right with this one. Oil news. What we got in oil going on right now? That's CV consumer confidence numbers come out. 98.3 at 100 point. DD band is always a really strong trade. Like I said, about only 8% of days will close below this green band. So it is sort of crazy to see the market suddenly turn on its head. I think a lot of this has to do with Trump and his policies. I don't think the market is very comfortable with a lot of the tariffs, a lot of the things he wants to do. It seems to be very expensive for American companies out the door. You know, making labor more expensive, materials cost more expensive, manufacturing more expensive, all of that. I think this is really the reason that people are responding this way to the stock market. As great as Trump's stuff is for American workforce, it is definitely expensive for the bottom line right out the door. So lower DD band is like one thing we always look for. The market tries to save inside here. The problem is it can overshoot and come back in. If I die and come back, then I'm gonna get right back in on the band. So I might have to just close this just to kind of save myself for now. If it starts to overshoot this, I don't know if I want to take much more drawdown on this, but I play the statistics. So I gotta trade. I have to trade the odds. The market just isn't what the market does, but I gotta trade the odds. We gotta do the smart thing. Really solid pivot there. Ratio's good. Pivot's good. We'll probably overshoot and turn around, but let me see. Let's trim out just a tiny little bit here. Low consolidation, pretty good. Low volume, we're good. There's the bounce. Let's see if it bounces. Come on, I'm counting. I'm celebrating way too early. Let's see. Let's see if the market stays holding structure. It's not that bad. It's bad, but not that bad. Well, we'll see. I'm getting that pivoting action here, but the market is just selling against it. So I don't know. I don't think I'm going to get it. But you guys can see there's that pivoting action off of this level. And the market is trying to hold. But no! It doesn't want to do it. All right, I'm going to trim just a little bit. If it doesn't retrace and recover, I'm going to cut. I still got to hold because we're going to overshoot pivots, but it's still a fight here. Still a fight. Now, this is just interesting because there is like, you can see that there is that pivoting desire right here, but it's just not strong enough. Just not strong enough. Jay, I don't ever fight against my own tools. I don't think you've ever been to any of our classes. You forgot that I went on like a 22-day win streak with my tools. I hate when people see like 2 or 3 losing days and then they're like, "Oh, look at that." You don't see me put up awesome stats for like an entire month. It just happens. Sometimes the market goes a certain direction. So this is something called a probability. 88%, 90%, whatever. They're probabilities. Like, I have to trade with the numbers, right? I have to trade with the stats. If I don't trade with the stats, I'm just gambling like a lot of other people just gamble, right? So I have to do what the stats tell me to do. The data isn't changing the market. The market already prices in stuff before the news comes out. It's called the efficient market hypothesis. The news is not surprising the market. The expectations were slightly off, but the market already had priced in what people believe it was going to be. Just watch the pivot. There's a reason these probabilities are here. Watch. It can lose, but I have to trade on the odds. Just watch. I follow all of my rules. I don't think you've been to a single class that I've taught because it teaches you the rules. None of my rules have me trying to short this market. You can't like comment on that if you don't know what my rules are, and I'll tell you what they are. So I have to bet when markets are liquid. I have to bet when markets hold structure, and I don't bet that structure breaks too often. When this ratio is greater than half, I always bet that this survives ultimately at this one line. So again, as you see, it's trying to survive and now it's losing. And now I can say, okay, I'll pull the plug. Right? But the idea is that there's only 8% of days will close below the screen line. So I had to follow the rules. And it doesn't matter, like, I'll ask you a quick question just so I can quiz you guys. How many days in a year are green? And don't answer it for him. I'm going to ask Jay if he knows. So Jay, I'm going to ask you a probability question. How many months, don't go count them, just see if you just know off the top of your head. How many months, or what percent of months are green? Just curious if you know. And what percent of days are green in any market? Off the top of your head. The statistics are extremely important. A lot of people see markets coming down, they're ready to jump into short. But markets find buyers in liquidity all the time. I long all the time in bear markets. I made my career doing that. I love how those of you that answered the question that aren't the person I was asking, y'all didn't listen to the question. I'm asking the person asking me about my rules what they know, the stats. I don't know if he knows. I'm not fighting resilience. I don't think you've been to the class because resilience doesn't apply right here. That's not what resilience does. Resilience only applies at the box here. Resilience is not even used here. Jay, see, like, look, this is why you should listen to me. I could be wrong, but this is what I'm betting on. This is liquid here. Now, I could be wrong, like I said, but you can see that the market is fighting this pivot. There's something magical going on here. Resilience doesn't apply until I get to that box. Resilience is not applicable anywhere else. I think you guys trade with a lot of technical indicators. You're used to seeing like indicators go up or down, and it means the market's going up and down. This is a confidence meter only. This is actually telling me that is resistance from here. That's all it's telling me today. It's not telling me up or down market. So my up trade goes to there and then I'm done if I get it. But do you see how the market's trying to support this exact number that I drew yesterday? There's a whole science to this, but that's what I'm trying to exploit. It's an odds. So probably 92% of days will hold that. Yeah, like 69%, right? Well, no, that's under like our ideal conditions. So the idea is that most days are green and most months are green, right? 70% of months and about 50 to 70% of days are green. So I have to take the statistical trade. Even if it loses 3 or 4 times, it's going to win 80, 90% of the time. So if there's 3 days that it doesn't work, then it doesn't work for 3 days. But I still have to play the odds. The odds are staggering to not take them. While people see this and they go, I need to short this, you might notice that most of my trades, I'm pretty much always first in the trade, right? Even if I'm wrong or right, it doesn't matter. I'm playing at the right spot, right? So as you see, there is something happening here that's trying to keep this market going at this spot. I don't chase a short, even though markets look bad. Markets don't just fall straight down. They chop on the way down. As you see in the last 3 or 4 days, the majority of the day was actually green candles. Not even just the direction is down, but you can see that for like 10 hours it's green, and for like 5 hours it's green, and for like 6 hours it's green, and for 5 hours it's green. The short setup is only like 1 or 2 candles, 2 candles, 2 candles. It's not like, I think, and again, today could be the day where it just falls and falls and falls, but it's really rare that markets just go red and red and red and red and red. I think most people think that, but that's the lack of experience in trading that people think that, like, oh, it's red, let me try to get in on that red. As you see, it's rare to have red, 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 red. Now that started it. But if you were to count these candles on where the opportunity is, let's start here from this day forward. 1, 2, we'll count the dojis as not red. So 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21, 22, 23, 23 of the hourly candles are green. And then you have like 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 16, 17 are red, right? The opportunity never lies in the red candle on any time frame. And that's like The statistics of that is staggering to most traders. And look, I can be wrong on the trade, but it doesn't matter because 90% of days I will be right on that trade. And it just so happens that my goal is just to not blow up. I'm still green for the day, believe it or not. And so just the goal is just not to bust out. And I have to take the stab every time. And now if it's losing the trade, I'll just close out. As you see. And when we reclaim, I'll get back in. And that's it. So the idea is the opportunity is in being in that trade. And trust me when I say, if this is not, see, I close everything out now because I lost my pivot, but if it doesn't work, it doesn't work. But the point is you have to lose the right way. And if you can predict which way the direction goes, you can't because the market's random. So what I do is I take the pivot every time because I'm going to show you how often it works, right? Even in this market, it works just about every single time. It works this way every single time almost too. It works this way every single time, almost like 90% of the time. It's there. And then of course, when the market falls, you just take a lick and here it overshoots and comes back in. Today, if it comes back in, I catch this trade so many times with that attack. And you guys may be trying to figure out like, where am I going to shorten here? And by all means do it. But in this situation, I do that trade statistically every time. There's a whole science to it. That's the kind of the rule here. So statistically, that green band is bay. It's amazing. Even if it overshoots and comes back in, I'm back in the trade. I always take the trade off of there. Always, 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 always. Even if it overshoots, it tucks back in. It's where to break and keep going. It has broken. If we jump back in, I'm back in on the long. Easy as that. So I have to just follow the stats. So Twitch cringe. This is not real trading though. This is prop firm trading. There's a whole different strategy to prop firm. If you inch along in a prop, I don't do this in my real account. If you inch along in a prop firm, it punishes you. You have to get to a goal within a certain amount of time under certain conditions. So I don't trade the prop firm like I normally would trade a real account. That's another thing a lot of new traders don't understand is they treat it like it's real trading. You have to actually play the game. And the game is a little different than like real trading. Yeah, there is no sign that we're out of a bull just yet. So this pivot has to do with the margin requirements in the market. In futures, margin requirements are based on a program called CME Span. And CME Span sets margin requirements based on the expected range of where liquidity is in futures. Hold on one second, guys. I gotta do something real quick. So if we reclaim the green, I'm back in. Oops. I fucking forgot to do something. But you guys, you have to be a little less naive about markets. You can watch somebody go on a 22-day streak and then they have 2 or 3 losing days in a row. And then it's like, question everything. You know, it's a little, you got to be realistic that nobody wins 100% of the time. I think that's what you guys expect though. But watch the person who got a payout in the first 10 days of doing this and maybe ask them questions instead of trying to teach them stuff. There's a reason I do everything. Nothing's off the cuff. It's about odds. Like if you get odds, like in playing poker or whatever, you're going to bet on the same odds every time. So as you see, I've lost the pivot. Now I'm out, but you can see that when we got to the pivot, there's no lie. There's some magic to this number with that volume that came there. Now I'm just out. Now here, the thing is today, if the market falls, it's no big deal. I'm still green for the day of all things. Not a big deal. So the idea is if it comes back inside of here, then I take the long. I'm always the first in that trade. I have to take small stab, small stab, small stab. In a bear market or a bull market that's turning bearish, you guys are going to see that that's kind of what happens. You take a little bit of drawdown. Now I was up 3. Now I'm only up $600 per account. That's it. I'm still green for the day. So I'm still making a little bit. At the end of the day, I'll update you with the progress. But yeah. But you have to trust. There's a whole thing like, yeah. How do I find the white line where the market resists? This is printed inside of the platform. So our platform gives you this number exactly printed right here at the mornings. So today, like I said, even if the market's selling off, it's okay. The point is I can take setups. And again, you can't ever predict that the market direction is gonna be, because each one of my pivots here and here was trying to fight with volume, and then they just lost. To be able to forecast if the market's gonna overwhelm structure, you can't. Nobody can predict the exposure everyone has to the market. So you just have to take a stab, take a loss, take a stab, take a loss, and I'm done. But 90% of the time, it'll work. Just so happens the 3 or 4 days the market has fallen down, no big. The minute it turns around, which is, it could be today, it could be tomorrow, it could be the next day, I'm the first person in the long while everyone blows up being short. And the idea is that markets are bullish. Roughly 70% of months are bullish, and roughly 70% of days are bullish under certain conditions we have. So under these conditions we have right now, roughly 60% of days will be green, even in a down market. So the idea is it's statistically favorable to only take shorts when everything is bearish. But right now, this number is still bullish, which is crazy. Despite us selling in a bull market, the stocks are still holding on to a bull market. They're still there. So, but the idea I ask you guys is I want you to say something. Now, I walk up to ETF and within like a month of seriously using them, I'm in a live account. I walk up to Tradeify, within 10 days, I get my first payout. So there is some magic to what I do. You just have to trust that it works over time. And that's the part of a trading. You have to make sure is that you're doing the right thing most of the time. And my strategy very much is a short strategy in a bear market, but we're not in a bear market. Not yet. So that's it. So the idea, F2 in a real futures account, I trade completely different than these prop firm accounts. In a prop firm account, it doesn't matter if you bust or not. The goal is to make a return on your investment over whatever period of time you care about. If I pay $500 and I get $10,000 out of it, I've made money off of the prop game. The goal with prop firm is not successful trading. It's trading within boundaries and confines. So the question is you can actually choose to blow up the account and start over for another couple $100. You can choose to do that because it's faster to the finish line than working your way back up or something. So the prop firm world is like, this is why people come to my prop firm mastery class. People don't treat prop firms like they're a different game than trading. A prop firm isn't trying to make a steady P&L curve over infinite amount of time, which is what you normally do. A prop firm is you have to not lose too much. You can't win too much. You have to really just kind of walk a fine line within a certain amount of days in a game that's designed to keep you in the market longer. So these things have to be traded completely different. I can choose to take a bigger levered hit to actually say, you know what? I got to wait 10 days to pay out if I don't make this big trade. So I got to take it anyways. So that is the kind of the point, is that you can choose to do different things that you would do here. All right. Yeah, so prop firm work is a whole lot different. My goal right now, you guys are watching me right now do something that nobody else in the world has ever done. Are you ready for this? If you stay on the stream, you're watching me I'll be the first in the world to do this. I will be the first person to have a live account in every prop firm. Hands down. There's no question about it. You will literally are watching the best prop firm trader that exists on planet Earth right now, because I will be live in every one of them. I'm Babe Ruthing this. Tradeify's next. I will get their live account. There's a method to the madness, and it's completely different than what you guys do, but I will do it. So I promise you guys, just watch it. I'm going to get a prop firm live account. So I'm trying to game the system to get the live account. The most statistical, probable way to do this is to take small stabs at the longs. And if you bust, start over. And if you bust, start over. And if you get there, you win. It's beating the prop circus game, the fucking carnival shit that this is. This is not real trading. And you guys are here to learn me taking this challenge is not how I normally trade my normal stuff. The Futures Desk and Blue Sky, I've never heard of these guys. Are they new? I'm going for the majors like Top Step, Tradeify, Apex. I'm going to get live in the big ones first, and I might do some of those smaller ones if y'all want. Been around for years. I don't know. Like, I don't really trade prop firms. This is like newbie stuff. But I'm doing it because I want to do it for you guys. I want y'all to see me do it. So I'm not really like familiar with the prop firm world as much. So the newer, smaller ones, I don't really know them. Or the older ones, I don't know them either. I just kind of know like the main ones. That's awesome that you have one. Oh, awesome. I love it. If you have 2 accounts, it's incredible, man. You said, what is it called? Blue Sky and what was the other one? Futures Desk. Okay. I'll have to check them out. Were they easy to get? See, this is a whole new world for me. When people are like, hey, you should try to do like, people first were like, hey, can you trade the prop firms and tell me if you get a payout? And I was like, sure, I can do it and get a payout. And then once I started doing that, and then people were like, you know, then I was like, oh, you can get live accounts too. Then my goal became, I'm gonna get the live accounts just to do it. They make you K1. Yeah, so K1 is kind of the ultimate goal with this, not to get sim payouts. I'm agree with you. But if you guys are all watching me for the first time, like prop firm stuff is for like newer traders. And the goal is not for them to make sim funded payouts. I don't care about that. You know, that's like not even money that's really worth it. Making like 10 or 15K payouts from these prop firms. You're not really taking home much. I mean, you paid money to go in. Just imagine that your sim funded take home is like 40% of what you made. That's a good rule of thumb. For every 100K somebody claims to have got paid out, they took home 40 at the end of the day. 10% goes to the firm, roughly 37%, I think, is the cap go to taxes. So say 40% and 10% go. That's 50% already out the door. Uncle Sam and the prop split. Minus whatever your resets and evals cost you to get there. Thousands more. So I promise you, everybody's 300,000 with this and 500,000 with that. The take home was more than half haircut. So. Uh, 1099 is wages. So again, this is my first year doing this. I could be wrong, but any 1099 wage, this is like consulting fees, is added on top of your income. Whatever the max, like if you already make millions a year, that's going to be taxed on the top. So like you're trading money from the prop firms that you get your payouts is actually considered taxable. It's like income, like wages. Yeah. It's you get a 1099, yeah, NEC, yeah. But you have write-offs. What can you write off your prop losses? Can you write off like the cost of this in a way? This will be my first year doing taxes on this stuff, so I'm interested to. You cannot. Oh, you can write off your Lambos and stuff. This business expense. The sign-up costs. Well, that's good that you could write them off. I mean, I guess that's useful. You can deduct my trading course. Oh, very nice. Well, I know you have write-offs against 1099, but I guess, well, you're right, because if this is considered a job, then your business expenses to the job should all be able to be written off. Like it's 1099 general business expenses you can write off. So I guess you can write off all your evals, all your props, resets, everything, because this is the cost of doing business. It doesn't matter if you register as an LLC or not. A sole proprietor and LLC run their taxes the same way. You can write it off as personal as deductions as well as an independent contractor. You don't even need an LLC, I don't think, to do the write-offs. I think in like the tax level stuff. Again, I'm not an accountant, but I remember my accountant said. I remember always asking, like, should I charge this to my LLC or should I just take this personally? And my accountant was like, it doesn't matter. They're the same thing. So in the tax code, a sole proprietorship and an LLC technically are the same thing. There's no benefit to day trading this stuff through an LLC. I don't think is Jay, are you an accountant? This is stuff I need to learn this year. He said it doesn't matter. Put it in your CP or put it in the TurboTax. It's a pass through. Yeah. It passes through to your personal. See? Exactly right. You guys see? I'm learning from you guys. I'm in Texas. Like an LLC, I don't think gives you any extra benefit to do your prop firm stuff through an LLC. Now in trading, it could in a particular way. There's people that like trade through S corps and stuff. There's all kind of reasons they do that. Yeah, there's no difference between a single member LLC and a sole proprietor. It's a pass through. Yeah, always talk to your accountant. Yeah, this is the first year I'm taking prop firm stuff to the table. But the way that I see it is I'm thinking just like my business because I have employees and I have 1099 wage employees or 1099 contractors. So I know that like anything that you do in this trading world is not actually really trading. You're just doing consulting work for a prop firm. You're doing like market research and they're paying you for it. And so because of that, every single dollar that you spend for this job is a write-off, including your rocket scooter education, as somebody said, the trading platform that you buy to help you with your job, anything that you pay for, subscriptions to Twitter feeds, subscriptions to YouTube channels, cost of courses, all of this has to do with your market research job that you do. So all of that is deductible, I would assume, although I'm just assuming because I haven't done what's it called? Prop firm taxes. This is my first time I'll be doing it. I just started this. Yeah, futures are taxed different than equity games, but this isn't real futures trading though. Yeah, we already covered that, Frog Dog. So right now we're talking about what's deductible in the 1099 side. But what I was telling people is that your take-home pay from the sim funded is not a lot. So the influencers here, like I made 200,000 in payouts. They really only made like, 90,000 of that. LOL, Andrew. In a C Corp, you can save up to 250,000 as retained earnings. And you can pay yourself as a shareholder up to 43,000 if you are single and 90 if you're married. Yep, that's where I am right now. I'm in a C Corp. Markets are absolutely fucked. Yeah, it's just not good today. You can deduct home office, technology, education, professional fees, all of this. Yeah, all of you who are trading through a prop firm can deduct like all your shit for the most part because it's a cost of doing business to get paid. So now your computers, your internet, your office space in your house, all of this is now deductible because you're now a trading employee or a market employee. Your dog food because your dog protects your office. LOL. Yeah, Pickle's a guard dog, man. So, like I said, today somebody's asking like, the point is that it's to identify if the market's bad. I took 2 stabs at this, 2 stabs, 1 and 2. I was green for the day. Now I'm back to even. It's totally, actually I'm up 600, 400, 400, 300, 300. So I took a stab, let it fall. I'm not gonna do anything else. So the point is that when markets are doing this, I only really get bearish once the market is a solid bear market. When it's selling in a bull market like this, it doesn't matter if I miss one or two, what is this, 3 red days. As you know, statistically throughout here, I mean, ups and downs, I still traded correctly through this. And if the market has shifted its tone, it's only temporary for now. And inside of here, the goal is not to say I missed out on this down move. The goal is to say I'm still going. If I can take long stabs and the market sells off 3 days in a row and I'm still alive, I'm doing something right. And that is kind of you have to take stabs when markets are liquid at liquid spots. It's just the rule. So in this example, when markets are liquid, I have to take stabs at longing only when markets are liquid. And there is liquidity as well at MHP. So the point is that you can't bet how far markets fall. You can't bet on the exposure people have and how much it'll crash. Markets do not sell on technical reasons. They sell off of people, or they don't fall on technical reasons. There's no reason a market falls other than just brute force selling overcoming liquidity. That's it. Liquidity exists here and liquidity exists there. And so when markets are falling, you can see that it's trying to hold liquidity and then it gets overpowered. And now it's trying to hold liquidity and then it could get overpowered. But each time you have to say, where's the liquid spot? And I take my stabs at the liquid spot. And that's basically all I do. So the idea is take a stab, doesn't work. Take a stab, doesn't work. As you see, like when the market through here, you know, I showed that was the pivot and obviously it failed out. But the idea is that I'm not longing at the wrong spot. That's the genius behind what we do. And again, trying to get the market direction right every day is a fool's errand because you're going to get it wrong half the time if you flip-flop. The market is more green than red. So the tiebreaker should always be if the market is even slightly green, it's to err to the side of green. Statistically, that is the correct way to trade. Now, again, you guys are talking to someone who's like treating the markets mathematically. I don't use like weak signals or weak indicators. It's all math to me. So I've always traded the market with statistics and that's been great success. I'm talking great success. What I do is great success. There's no question about it. And the market's going to downturn for 3 or 4 days. And that's part of the game. You know, you just have to understand that. These green lines are generated from a reverse engineer of a CME program called SPAN. CME SPAN sets ranges. Sets margin requirements based on expected liquidity ranges and futures. And the expected liquidity range is a predictable high volume pivot that we can calculate at 5 p.m. the night before. So when you get close to this pivot, there's volume that starts to appear right here because the market has structure that's being hedged against. It's a really cool trick. Now, this last particular pivot today on this bear short up there is a open like pressure to the downside, but there's also support pressure on MHP to the upside. Res is less than 0 on this, but it's still worth a small stab for me to try to take it. Even if it's pivoting early, I'm not going to take this trade early, but let me see if NASDAQ hit its own pivot by proxy while NASDAQ's probably turning around. Let me double check this. Not yet. So in this particular market, the correct trade, actually NASDAQ did get to MHP. Okay. This particular market and this trade is actually really good because MHP is such a strong pivot. And as you see, that high volume is there trying to amp it up off of this thing. So I do like this idea of this trying to pivot here. This is the telltale sign, guys, if the market's actually bearish or not. This is the monthly gamma exposure of dealers right here. So inside of here, because this is still above that and this is still bullish, the market is just liquidating in a strong bull environment. And at any moment in time when that happens, the market can decide to turn around. And that's why we still don't, you know, run up to this thing and say, oh, this market's fallen to 0. I need the full signs and the full evidence of that to actually do so. But But I still trade when markets are liquid because it's less volatile and it's a higher probability of winning. So, like, I don't hate the idea of what I see. Now the question is on this account, on this one, here, is that MHP is a really strong bounce, and I am looking for at least the S&P to get back above here. If we do approach that, that's a long setup from there. So I'm waiting. I'm using MHP. Hopefully we can get a nice little return up here. And then if we bounce above here, I'll take the long because, again, 92% of days will close above this bottom green line. Only 8% of days will close below. So when it overshoots and closes below, I just get out of the way, let it fuck around, and then if it returns there, I'm back into the game. So let's see if I can turn this into a really decent trade. I know it's like when people, when you watch somebody taking a loss, you're really like, you're really programmed to think like traders just get it right every single day. You guys are watching the best loser on the planet. I love saying that. I lose better than all y'all. That's why you're watching. I can survive this market like nobody's business. I'm gonna walk away green for the day. So monthly hedge pressure is based on all the options. What we do is we pull in every single option that exists for whatever it is we're looking for. Let's say QQQ, for example. We pull in all the QQQ options, and our algorithm looks for options that it believes belongs to a zero risk trade. We have a way of detecting that by looking at subsequent markets. So an option that's tied into like an underlying trade as a hedge, we can find that. So we find all options that are being hedged against. And then we cherry pick those out of the mix. And then we find the maximum gamma exposure of those options that were sold to them by options dealers, which again, we have a way to pinpoint if the option was sold dealer to dealer. We have a whole method to do this. So it's gamma exposure of market makers. The orange is monthly options data, yeah. Oh, it's an amazing pivot. It's one of the best that there is. It's the monthly structure of the market. So if this market is dead and going to die, it will break through here. And as you see on the guide, if it breaks through there, it is ridiculous. It's bad. So again, if the market is just selling off heavy in a bull market, you're going to see some strong pivot here. But the problem is that the stocks, this little orange line here is telling you what the stocks are doing. The stocks have almost, like, you know, for the last 3 days, are below their MHP. So the stocks are in negative gamma territory for the month basis. This is the month scale indicator. So our greater market signal, right? Greater market, to say is the market bullish or bearish. It's very simple. This by far is what, this is my guideline in my bullish or bearish. Greater market, number one, is, are the stocks right now bullish or bearish? They are actually bullish on their balancing of bull to bear side. So this is a bull bear bias. It's slightly greater than half. Half is the bull point. That's good. So far stocks are still hanging in there. Number two, if the SPY or QQQ is above its MHP, we use SPY as the gauge for the whole market. Then what happens is SPY is greater than MHP. Then SPY on its own accord is receiving long pressure from monthly gamma. So example is SPY tracks the SPX, okay? That's how this works. And so SPX is equal to some market cap weighted sum of the stocks, okay? So if we're trading futures, ES is an example, tracks that too. Now, let's look at what all of these things are doing in a single bite. This is the stocks, okay? We had to see if the stocks are moving because they trade independently. This is SPY. That is SPY. That's monthly. So monthly on SPY. So this is stocks now. This is a now scale indicator of the stocks that everything's tracking. This is a monthly scale indicator of the gamma on SPY. SPY and ES are going to trade together because they're going to track the SPX. And number 3 is something called monthly maps. And monthly maps is forecasting 3 months out based on options. And that also is the one today that's showing a 3-month outlook that's somewhat bearish. So when any of these 3 indicators are bullish, any one of them, I'm still bullish the market and taking longs. It takes all 3 to be bearish for me to be bearish. And this is the best indicator you'll have for assessing the market. Because what it does is it looks at all kind of time frames together at once, and it's looking at the stocks you're tracking. As a futures trader, these 3 things are solid gold for assessing the market. A few red days, or 3 or 4 red days, even though the market's starting to build bearish structure, it still hasn't beaten the bull market yet. If today crashes below here and dies, this is bad for weeks. But if the market is inched up against MHP right now, this could be the bottom. And I always like to take a stab at it. This could be the bottom sort of trade. Why didn't I take the BRSU break of dynamic MHP down? I still don't chase shorts unless I'm fully convinced to take the short. You can take it. It is an option. It's just that I personally, in trader funding programs, don't like to take the short trade because I don't like to deal with the volatility. Usually in trader funding programs, because of the way volatility is one of the attacks they do against you, with the drawdowns and such, I don't like to trade volatility. I like to take the bull trade where it's stable on the way up instead of the volatile trade where it's crazy on the way down. Does that make sense? Moro? One of my rules with beating trader funding programs is not to short. Very rarely, if possible. If the market's falling, wait. Get out of the way and wait. People don't understand this, and it's funny I get a lot of people come question what I do. I'm the one that gets paid. I'm the one that gets the live accounts. Not you, but like other traders. They're like, why do you do this? Why do you do that? But it's like, there's a reason. It's a mathematical probability that I'm trying to latch onto that's a better case scenario for just beating this game. It's not like I would, in a normal trading account, I'd love to take that short all the time. But in this world, I have to trade it differently because I can't. Drawdown is really bad for, like in general, drawdown's like really bad for trader funding programs, right? So if you're committing to a volatile trade rather than sitting out, then you're putting risk on your account to be chopped up off of like trailing drawdowns or any kind of drawdown. I like to avoid volatility if I can, right? I shorted overnight in this particular case because I had the obvious setup overnight was different. I don't usually take a trade more than once unless it's a liquidity based trade. And overnight I did take that. Like I said, it's very rare I'm going to short, like very, very, very rare. Overnight, and I used some discretion, but overnight was extremely obvious. So basically, when the market opened here, it did like this, and then it started falling down, and then dropped below, and then came right up here. And I just threw a couple contracts at it, and it fell very quick, and I closed out. MHP breaks and tests, I'll usually take. In the overnight, it's a lot cleaner because there's no reason for the market to be moving. There's not other stuff to track. So it's not like I'm shorting for the market to fall. I just exploited that for a very quick dip on volatility. And I can do that in the day session, but in the day session, I also would rather wait for better setups, say better indicators. And the day session is where you get a lot of your really strong long setups to play with. So like I say, it's really, really, really rare that in a day session, you're going to see me short. Nighttime, I'm a little more flexible off of MHP only. That's the only one I have to trade with is MHP. So on MHP breaks, I'll usually will take them short. It's one of the short setups we do have. It's just sometimes I don't take every one of them. I use a little discretion on that, but let me show you the cheat sheet. So just because the trade is available doesn't mean I do take it every single time. I long off of MHP every single time, but the breakthrough is one of the short setups. And overnight, when it breaks through like this, I'll usually take it. It's more obvious. In the daytime, it's the same thing. In the daytime, I could take the short right here easily. The overnight MHP, I don't normally take the short in the daytime off of. I guess I wasn't fully answering that question. So these are the overnight pivots, and overnight I'll use them overnight. In the daytime, while they still can pivot, I'd rather use the daytime MHP to make that same judgment call. Yeah. Hopefully that answers your question better. Like, if the market's really going to die today, we're going to lose this. And then that's an amazing market's dead. Right. So I'm going to wait and try to short that one if I can. Hopefully that makes sense. I do consider the dynamic head structure levels and the real-time hours, yes. Especially to the long side, I do. I like to bounce the long. I like to, MHP is always a good strong trade dynamically during the day. So today, like I say, I'm going to play this one a little cautious. I'm still going to take the long if we reclaim right here. I still don't do much in no man's land. If we reclaim to the bull side, in play right here, I'm glad to get in on some longs down here. Like I said, I'm still green for the day. My trading style is probably different than people are used to, but here's the thing. You know, the people that are extremely talented at something are going to do it differently than you do. That's just kind of understood. And so just kind of take it with a grain of salt. Just watch. I know what I'm doing. That's why I just explain to you guys, ask a lot of questions, but I'm never worried. I always know what I'm doing. 3 days of selling in a bull market, yeah, and everybody's ready to start shorting this shit, right? I don't have to take every little trade that moves. Yeah. So I take longs at my strong pivots only. DD band, MHP are the strong pivots that I long from. Let's retrace and tap that band. That's what I want to see. Pretty solid here. Like, the whole point is that, you know, waiting for long is the strongest way to be a trader. If you catch a short, that's great, but trading when markets are liquid is really the key to winning these trader funding programs. It's like, it's the case. And if you blow up, who fucking cares? Just start over. Like, you're going to find months and months and months and months of like solid trading like this. Even in a bear market, you're going to find months and months and months of nice, clean trading. Your job as a trader is to identify when markets are selling and just get out of the fucking way of your real account. But in these trader funding programs, these things are dirt cheap to get like a 20x return on your money. Like, there's no reason to like babysit them like your real account. If you're babysitting a trader funding account, you're trading it wrong. You're trading it like a newbie. You're playing their fucking game. Like, and I try to teach people this all the time. You walk up to the casino and you're playing the casino's game. I beat the casino. I reverse engineer their shit and I trade against their own rules. And so you guys might think, you know, you're using your trading style in this, but you're not doing it right, probably, because the rules that they're making you follow are to your own detriment. You have to get around their rules somehow most of the time. And that's what we try to teach you guys here. How many seconds in lab for YouTube? 7. Let's test it out. Okay, ready? Everybody type something now. Shut up, Simon. 7. LOL. 7. I hate you, Simon. All right. So that's it. 7 seconds. One thing you can't thank me enough is the calmness to wait for a long. Yeah, I mean, it's like, trust me when I say the best thing you can do in a trader funding program is to wait for a long. That's it. That's the secret to this. I'm still fucking green for the day. It's crazy. I've taken, you know, I did make a little bit on a short trade and I took 2 long stabs and didn't work and I'm still up for the day. I'm still up. Geez, hold on. Like $3,000 still for the day. And I'm gonna take my second trade in just a second. Again, I'm not gonna be too overeager on this one. Let's let her rip. Seven seconds is a great band. Oh, you know it is. Why am I not trading the retrace? Not yet. Trust me when I say this is a probability trade. I don't bet that it breaks. I let it break. I let it confirm. And I get back in. Bull breaks. Always, always, always. The trick is never get in early. Never get in early. Never get in early. Trust me, I say it will usually almost always give you the opportunity. Bull trades are so fucking easy to do. Watch. It breaks through that green, pops up, has a nasty little red candle that comes back to the green, and then I decide if I'm going to long again. I always draw this little loopy arrow here so you guys can see that. Watch. So it pops really big, catches up with that, and then that red starts to push it back down, and then it fights, and then either dies for the day or it recovers. It'll be the rarest of the rare that this just goes like this without testing. Bull side breaks almost always retest the bull pivot. When you're breaking into illiquidity, which is a bull side pivot, the market always tests liquidity. Liquidity is this pocket right here. The market is not looking for illiquidity, it's looking for liquidity. So when you break into an illiquid spot, it tests the liquid spot. And then it says, oh shit, there are more buyers than sellers. That's very key to understand this. This is a liquidity point as well. Illiquid down here. This is liquid up here. And so anytime you break into this move, sorry, it's liquid at the spot here. It's liquid here. This is a little bit different than the ranges over there. It's not a pocket. It's liquid here. So anytime you break in either direction, liquidity is always tested. Even if you break down, liquidity is always tested, as you see right here. Does everyone understand? Repeat it for me. Liquidity is always tested on a break. Always. Repeat it. Liquidity is always tested. This is not a reversal. This is a test. This is not a breakout. This is not a reversal. This is a test. Liquidity is always tested. Always tested. Always tested on a break. The market confirms, was this the correct thing to do? On a break, liquidity was tested. If liquidity wins and becomes illiquid to the upside, liquidity is also tested. So the common break pattern of DD band is like this, and then this, and then try to sell, and then this, and then try to support, and then go. So the bull setup will look exactly like that. I teach this all the time in DD band. We always talk about this. So I'm just going to draw it so you guys can see it. So right about there, I don't ever long right there. Never do I do. This is just a liquidity test. I could be longing at the freaking high right there. I need confirmation to bounce. You know why? Because the R&R on that trade, if it confirms, is sick. Like super sick. Like that R&R is amazing. A support here can end up right there. That's why I take these stabs. And all the I told you so traders or whatever. You should have shorted. I told you so. Look, I get it, guys. But trust me when I say the strategy here is not to win this trade. The strategy here is to win that trade. And I could lose 9 times in a row, and the 10th victory will pay off all the 9 that lost. That's literally statistics that work. So one thing I never do is I do not long below that green line. There's not a strong pivot. That's a liquidity test, and you're seeing it right now. I'm gonna I tell you guys, I script the market. Like the market is like a fucking movie that I wrote the script for, okay? I will teach you guys how we script the market. Did I like when I finished the sentence saying I could be longing at the high? The minute the universe gives you red candles, it's like the universe brought you here to me so that you can learn this stuff. And exactly when I finish my sentence, the universe shows you exactly what the fuck I'm talking about. So you stop asking questions about why I do the things that I do and then say, holy shit, there's something interesting going on here. This is what I want to see for the bigger run. Notice how I'm in no trade right now. Not yet. Not yet. Liquidity is, type it again so that you remember next time. Liquidity is always tested. Why did the chemist become a trader? That sounds like a knock-knock joke. Why did the chemist become a trader? Because I know it's a real question, but it sounds like a joke, like a setup for a joke. To get to the other side, to make a shit on me. Would I also say the balance area's POC is always tested? Well, POC would be liquidity, right? Previous liquidity. Not necessarily guaranteed that a POC will be current liquidity, but it was past liquidity, and it could have some residual effects from the hedging, yeah. Because bonds are shitty, LOL. Because they knew how to compound their interest. Oh, I love chemistry puns. LOL. I got balls of steel and crystal clear of my concepts. That's right. Thank you. Liquidity is always tested before an illiquid breakout. And I always take that bet. Notice how I'm not long on this way up. I'm waiting. And let me draw it for you guys again. Okay, it's normal for markets to test liquidity. This is bad for what we're seeing. So we fell right here. Market fails and becomes illiquid, right? And then it starts falling, but then liquidity is always tested. The DD band is a guaranteed liquid spot. When you touch it, there is volume every single time without fail. Without fail is 100% chance there will be a volume spike at that line. Okay, in here, it either rejects or it breaks through and tests. And this here is the long only on the breakthrough and test. This is never the short. This is called sit out. Irrational rules. I usually sit out. No trades being made. Haven't touched the platform. Don't forget, guys, if you guys are doing Tradeify or ETF, Rocket Scooter Code is going to get you the best deals out there. And it supports the platform as well. We'd love for you guys to support us. Let me get you guys that link really quick. Wait, where in Discord? Hold up. ETF. Here's a link for these guys. And here's a link for Tradeify, and we have a link for Apex as well. You guys want to know the secret? All right, y'all have to hit the like button one more time if you hadn't hit it yet, and I'll give you the secret. The secret. What was I trying to do? Oh, hold on. I have a meeting today with somebody from the marketplace, for the marketplace. So, quick question. Anybody here have a trade room or a trading company or anything? Like a trading Discord, a trading, any kind of trading, anything. That's my question. Or has a friend that has a trading company. Doesn't matter. Discord, sells courses, whatever. Did you guys know we have a marketplace with 0 commission? It's WAP with no condition. And it's better for you to host your business in. We have a Discord bot that automates roles for you. We don't take a charge off of your Discord sales like WAP does. We give it to you for free. I built, by the way, guys, you know I built a trading platform. Did you know I built a free version of WAP? It's free. So we do this. We do a commission on organic sales only, which they also do, and ours is less. But we don't take money off the top of your Discord sales. So you guys know a friend that has a marketplace. We do everything, general marketplace. Tons of vendors run their business through Marketplace. All kind of people. Like I said, I have a store here. Exclusive has a store here. Liquid Effects are here. Minx has a store here. You can buy everyone's Discord, courses, whatever through our marketplace. If you have a friend that has a marketplace, has a business, you have a trading Discord, you want to automate the roles, you want to automate payments, customer service, customer support, you guys got to check it out. And again, I built it because WAP doesn't care about traders. They don't have much connection in the trading world. They just built trading as a corners in their marketplace. It just so happened to be the place where a lot of their business came from, but they don't really understand trading. We do. And so we're building into this one to give traders tools they need. Like I can host my courses with videos. It's all pretty solid. Like, let me show you. And I built this. It took me about a little over 2 years to build our site, but our goal was to have actual things for traders. And one of the neat things we're going to do with this is once we get our rocket script built into the platform, we've already built it. We just need to give it to you guys. You'll be able to go through, and let me just show you how it works from the user side. Like I buy as a customer, look, I buy different people's software. I can launch it. I'm in a bunch of trading communities. I can launch all of them. These are all the roles I have in those communities. I can buy courses. Like these are the courses that I have that I bought from Marketplace, just as an example. Here's the 20 days profitability. I can launch the course. This is the older videos. We're going to replace these with the newer videos, but all of our courses are here. I can watch the videos. I can download the attachments, which are like the little handouts that come with it. It's really neat. And again, like I say, we don't, for your Discord sales, we don't even take a cut. WAP takes like 3% of your sales. So yeah, if you guys have a business, Dylan, any of you guys, y'all come over and check it out. Or tell your friends. A lot of people have been claiming about WAP. WAP's been kind of like, not everyone's favorite lately. So trust me when I say, they built such a humongous company. Can I tell you something funny about me being like Mr. Reverse Engineer, or me be Mr. like make something instead of use it? I'll rather make it. WAP's big business. I built what WAP had in that Discord bot in a weekend. They built their whole business off of a Discord bot that gives roles. I built it in 3 days. Literally, I built what they had in 3 days. The website and all the back-end stuff took a little bit longer to build all the actual stuff. I wasn't trying to copy what they were doing. I was actually building this concurrently with them from a long time ago before we even had the website. The goal was to build a platform that let you guys code your indicators and then sell indicators, courses, videos, Discord, everything in one place. Instead of having to like piecemeal your stuff, like people go like you guys when you sign up for Rocket Scooter, right? You got to go to like a bunch of places sometimes to get everything you want. And now we try to uniformly have it. My courses, my apps, my indicators, my communities kind of thing. And you have all your stuff in one place. And then you can buy indicators that people make from the marketplace. Like somebody makes a cool tool and sells it for $5. You can go buy it from them and they can easily monetize it. So can I build a free version of YouTube Premium? Hey, that's next on the list. I got you guys. Don't worry. Do I ever do scalping? That's usually what I do. Yeah, I do scalp trading. All right, give me 1 second. I'm going to take a quickie little bathroom break. I will be right back. I forget I have a be right back screen. Hold on 1 second. I don't think it's gonna be the right screen though. Again, I think it's gonna forget which screen it was. Yep. Oh, well, it's okay. Whatever. I'll be right back. Oh, I forgot to mute the mic. Well, if you guys got to hear me peeing, that was a rare treat. All right. I am back. Where's the bathroom break song? Oh, dude, I need to program all this stuff. I keep forgetting about that. Okay. Start your 1 month trial. Oh, I need to put 1 month rocket scooter trial. What's the trial even for? Try rocket scooter. Link in description. There we go. That's cooler. All right, guys. The toilet chair add-on. You mean I could just sit here and drop into a bucket? Oh, that's great. Sign me up. Revanced does YouTube Premium. Oh, nice. Just blew an account on GC. What happened, Gabriel? Gamma, you're out. I'm leaving, guys, and good luck with everything. Wait. Oh, are you saying goodbye forever? Or are you just leaving for today? The way that you said goodbye was almost like farewell. If we cross paths again, I shall see you. I thought I read it. I'm leaving you guys instead of I'm leaving, guys. Farewell, Matt. I'm leaving you guys. Good luck with everything. Wait, don't go. Come back. We miss you. Was I peeing in the same room? Yeah, that's the pee corner over there. It's easy. It's easy to mop up because it's wooden floors. It's super great. Yeah, for the day. Better be for the day. Bought the MHP on QQ. What's your thought? Not a bad idea, as I've been eyeballing that same kind of area myself. A lot of times, now this is make or break for the bigger market. Like I kind of want MHP to hold. Usually you'd want to see a V-shaped sort of move instead of a W-shaped move. The W-shaped move doesn't imply support as easily as a V-shaped move that goes through and supports after an overshoot. Higher volatility lets me think they can overshoot or undershoot. I get a little, it's always worth taking, but I always know that it can do this and then obviously test liquidity and then die. So if I were to take a long here, which is very possible, I can long only, very small here. And then typically below here, I can attack it with more small trade on the other side of that pivot to get a cost basis as low as I can for the hook. So usually if it's like Wing like this above the pivot, I don't trust it as much. And when markets are volatile, I usually assume that a fall to a pivot can overshoot before I take the stab. This is a prime example of that. So we fall through, we test liquidity, and then it keeps falling. So the test is what I look for, if that makes sense. Oops. So I don't think it's a bad idea. The execution is going to require a little bit of finesse in playing with it because, like I say, I don't trust W's that are above the position. So with Nasdaq also is very prime, or like very commonly overshoots pivots too. So Nasdaq that like breaks down through here can get really gross sometimes before it tests liquidity and then supports. So I usually like at the pivot will plant, like, especially an irrational market. I'd put a couple micros if I were long in this, just a couple. Let it take some drawdown. Build my position with minis around it to go. And irrational, like I said, I'd be trading like 1 to 2 minis total. I wouldn't personally, if I was going to touch this here. You're going to watch me when I do it. It's not going to be a big position at all. Yeah. This is not usually a strong reversal pivot. Like or a strong reversal indication. Undershooting the pivots like this. It's possible, but I usually plan for all cases since it's like less rare, or sorry, more rare to undershoot a pivot and go. I still take a stab around it if I can at all cases. But it's super irrational here today, and you gotta be very careful around this pivot. So what I'll do is maybe I'll show you guys how I'll do this trade. Let's do it with Nasdaq today. Okay. So when I inch right up to the pivot, I'll throw some micros at it. No big. And I hate, well, the thing is I hate, let me proxy trade this with S&P because I hate volatile markets and Nasdaq just don't really sound good. And Nasdaq is actually the worst of the two. So S&P, let me play the same trade in S&P today. This has roughly got 7 points of fall here, plus another 10 of overshoot. So we're playing in roughly the 28 to 38 range. Let's see if there's anything in the way down here. Let me double check on how many red lines nearby as well. So 26 is a red line. There you go. So this is good to see. There is an old impact line way back in here at 26. So that's roughly where I want to see that support. Good. Okay, so we do have some support right about 26. So let's go ahead and plan for that. That's really close to the range I want to be in. So now I can plan my entries around here. Hold on one second, guys. $11:30. Okay. Bum, bum, bum.
Okay, so let's aim for roughly like a 26 as a pivot. Now, the problem is breaking MHP can cause a lot of volatility, so I have to be very careful over here. We should be okay, I think. So that's roughly 20 points of drawdown from here. Even if I were to take a small long at it. But ideally, I'd like to see this. And then cover there. Oh, my bad. I need to update. Somebody need to update my my profits for today. Sorry about that, you guys. My bad. Thanks for reminding me. I tend to forget to do this stuff. This is where we are now today. My bad. Thanks for reminding me. Lower DD for NASDAQ is in the platform, my friend. 21,270. Bum, 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 bum. You're looking at PayPal to buy and hold, but can't understand the monthly map. Wait, you're looking at PayPal what? Okay. So I can't give you investment advice on your trades, so you can't ask me questions like that. Just ask me to analyze something. Normally, if you tell me you're going to buy something, what do I think? I have to say that I can't answer the question. So feel free to ask it again. But you're asking me to analyze PayPal. So let me tell you what my thoughts on PayPal's map is in general. Sometimes the maps are going to be weird and not make a lot of sense. So let's try to look at it and see, because some of the positions are what the positions are. So what we do first is we look at how the bear position is distributed. For the most part, the top of the bear zone is what you care about. And as you see, it's roughly sloping up. So bear zone sloping up always means one thing. Bear side getting stronger, okay? Bear side stronger. So just analyze the pieces and it makes it very easy. So let's start at the top. There's 4 ways to go about it. Number 1 is, what kind of zone are you trading in? Well, it's a bull zone. It's interesting to see. PayPal is trading in a bull zone, okay? Number 2, how's it changing over time? Well, we have to look at the sloping of these zones. The bull side is sloping down, so bulls are getting stronger. Stronger bulls. Number 3, the bear side is getting stronger as well. And the reason for both of them getting stronger, which is kind of makes it hard to analyze, is the inverted property of bear above bull. And this is known, all right, class, what is this thing known as? You guys know the answer to this inside of here. There's a name for this kind of phenomenon where the bear side's above the bull side. Illiquidity, baby. Volatility. Yeah, it's an IP. So an illiquidity pocket has volatility to go with it. So while you have strengthening bull and bear cases, the market's primed to have more volatility. So while it is trading in a bull zone, you tell yourself illiquidity pockets are going to have some volatility with them. And what I normally do is I tell myself, you know, this is the pathway for support over the course of the month. PayPal has lower lows over the next 2 or 3 weeks. This is actually sitting at a base, a bull zone bottom, if you may. So with PayPal right here is a bull zone bottom for next week. And with PayPal slightly lower is a bull zone bottom for the week after. Volatility means that the highs and lows are going to be like along that range. And this particular has a massive amount of volatility. No clue. Maybe PayPal has earnings or something that usually explains why you see that. I don't know. Does PayPal have earnings coming up? But as you see, the IP or the volatility range is like inside of here, right? And as you see, the market is like chopping inside of there. So what I tell myself is it's volatile. The market is going to be choppy. And as you see, it has been choppy and down. And while it's hitting a support right here, if there is a bottom, it's like now or never. If it doesn't base here, then it's no man's land further with nothing in between until 55. So not that it's going to crash, but the idea is if there's I tell myself, if there is a bottom, it's here. And it's not to trade for a breakout because you have bear resistance also. The best case scenario is the upper part of the IP fills the gap, right? So, you know, PayPal can fill the gap. But PayPal is likely in the next 2 weeks to stay ranged in here. Like if I get a green day or two, I would be extremely happy about that. But I'd expect it to kind of like still mosey on down lower. So I read it just like that. Choppy with downward pressure, the best it can do is fill the gap. That's how I see it. So I look at a bull zone bottom as if there's a bottom, it's now or never. So the way I trade now or nevers personally is I'll take a stab at the bull zone bottom if I believe that it's bullish with whatever stop I take. If I bought at 73 for the long haul, I'd stop at 70, right? And then, you know, I mean, tried 73 to 90 is massive with the 7. I would stop very tight underneath here and take a stab over the next 2 weeks every time it broke 73. So if this was 73, right, and it fell and I longed and I stopped at 70, I just waited. And if it hit 73 again, I'd long a second time and it stopped at 70, I'd wait. I'd lose 3 points and 3 points. And if it hit 73 again, I'd long a third time. And if it filled the gap at 90, I made 17 and I only lost 6, right? So I can see it like that. And volatile markets and illiquidity pockets will overshoot and be crazy. So I can expect to take multiple attempts at the same level. But as you see right here, this is that support that you do have, and there's nothing else supporting. So I read these maps like that. So it's like, is this the bottom or not? Well, the market's going to tell very quickly, is this the bottom? Now, it does look like kind of dangerous, right? As the market's been falling the way it has been. Then what I do is I look inside the daily liquidity map and see, is they're giving me an entry target to enter on. Yeah, well, today, right? PayPal hit a bull zone bottom at 73. So I could take a stab here if I wanted to bet that it holds for a big swing trade if that's what I was doing. So I look at the monthly map for general direction and general supports as they're daisy chained out. And then we balance everything for right now for liquidity map, which showed me right here, 73 is also a support. So I take long stabs at my supports every time. And if I hit a long support and it fails, okay. If I hit a long support lower, it fails. Okay. Long support lower, it fails. I do exactly what the big firms do, because the cheaper it is, the better it is for the long haul. I mean, hell, if it did fall to 50 and I bought it, that's great for like a 10-year investment, right? So that's the way I think of taking stabs when I find bulls and bottoms. I always like to take that little stab there. All right, here's my lesson from earlier, that low W-shaped consolidations above your pivot in a volatile environment, I let it overshoot the pivot and reclaim and test the reclaim. So today, if we fall to here in support, I'm going to be building a long pivot around here because that matches up with SPY monthly hedge. And if I'm betting the same thing I said earlier, as markets falling, the DD ratio is getting slightly stronger. There are stocks actually moving up in the bull zone. Not a bad setup for this particular market. Oh, hold on. Wait, done anything yet? Oh, my computer reset. I haven't even logged into my Top Step or anything. My computer had rebooted. I forgot to do that. Honestly, in my Apex, it's open. I was trying to remember if I did anything or not. I haven't done anything yet. Should I take the risk in Apex today? Yeah. Apex is trailing drawdown, which I fucking hate, trading trailing drawdown. And volatility. I'll avoid the Apex. Once I build a position around here, so everybody knows down here, usually my target is to test the next liquid spot. Now we already tested a liquid spot here. So my target can now advance to the next liquid. Like if we hit DD band, I can take profit. But usually when it falls to here and I buy, this is a reversal point. I buy to hold this and keep going. If this hadn't already had happened, like we just fell through here, and I long there, I would long it back up to the band and close out on a scalp. So I could still do the same thing, but a lot of times once the liquidity test and failed and we find a new liquid spot, I can trade the next resistance, which is usually what you try to do. And here we're going for that 26. Let's let her rip. All right, is that volume at MHP? Let's let it get bigger. Bigger volume, baby. I just wait. I teach you guys, waiting is the best policy. You know, there's one person that comes to the stream every day, and all that they say to communicate with this community is, hey, can you update your P&L? Can you update your P&L? Can you show me your P&L? So that person got blocked from chatting. So if that's you and you're chatting, nobody's going to hear you. Because, like, there's more to trading than just P&L. Ask questions about learning how to trade. I think that's so goofy. How much did you make? How much did you make? How much did you make? And I feel like people like that, I'm like, oh yeah, let me update it. I updated it, then I blocked the guy from talking. It's just so weird that the only thing that person ever says is that one thing. Like, is their goal to just see how much I'm making? Is that why you're here? Or are you here to learn something about trading? All right, so let me take the overshoot on this one. Do I want to play it? P&L queen, yeah. All right, let's let it overshoot. Overshoot and reclaim. Remember, expect the overshoot. Market's volatile. Expect the overshoot. No risk on the table yet. Expect the overshoot. And then on the reclaim, let's take the position. This is MHP. Let's expect the overshoot. Same thing, right? Let's take it when it tests liquidity and passes and tests liquidity again. That's the long setup. So remember, there's a protocol for catching a knife. There's a protocol. When it's volatile, don't catch it. When it's irrational, let it fall. Let it wait. Can you update your car's warranty? Damn it, Dylan. Hi, I'd like to call you about a business loan for your business. I swear to God, I don't know how I got into a database. I guess just being a business. I get 25 calls a day from American workers in call centers named, hello, my name is Bob. I am calling you for business loan opportunity. I'm like, hi Bob, which city in Chicago, in Illinois are you in? You know, like, anyways, yeah, would you like business funding? And I'm like, fucking loan sharks. If somebody calls you for a business loan, it's a loan shark kind of thing. It's a 30% fucking business cash advance sort of shit. Like, it's never going to be like, by the way, here's a great loan with a 5% interest rate, you know, like, you know, low monthly payments. It's like, you know, the guys behind the call center, there's like a dude standing behind them in like a, you know, a zip up track suit holding a fucking baseball bat with a gold tooth. His name's, you know, Paulie. Or maybe it's Vladimir. It's probably the Russian mob. Like these, honestly, like be honest. Do we get the reclaim? Yeah, so let's let one more red candle flush this and just see. Let it flush, and I'm gonna do it. You want the business loan from Vladimir? Yeah, you want good business loan? I give you a good business loan. Oh, good. I don't know. You want the loan, comrade? I don't know, man. You want the loan? Okay, I want the loan. Jesus Christ, leave me alone. Did I miss the pivot? All right, hold on. Let it reclaim. Let it test. Come on, test it. Test it. All right. Quick little 6-point bounce there. You want business loan? Can I talk to your manager? Okay, you can talk to manager. And the guy gets on the phone. Hello. Oh, you calling for business loan? Okay, hold on. It's weird, dude. I'm telling you. Don't take the loan from the cold call center. You're like, I already paid off the loan. Yeah, but you owe my loan. You get weird knocks on your door. It's like people following you in the parking lot at a grocery store. Italian mafia kind of thing. Who knows? Hey, Paulie, he wants a loan. Yeah, let's give him a loan. All right, I'm gonna take one stab at it. Just a one hitter. It's looking all right. The guy that signs your loan paperwork always has a nickname. Paulie Two Fingers, you know, something weird. That's not the person I want to take a loan from. The problem with extra kneecaps, accept those loans, no problem. I've got 2 kneecaps. It's okay. I only need 1. I don't know if you can hear the other scammers in the background. Yeah, you can hear like at the call center, like other people like talking to other people about it. You already took the loan and fully leveraged in the gold. Jay's fucking like doing the right stuff. Fully levered in. All right, so run link thread lines and impact red lines are some of the best tricks that we do have. You guys know we teach this in our entry target class. This 59, and this is why I keep history of these things. They're wonderful. 59.26. Anytime you're illiquid outside DD bands, the perfect pivot is from here. Now, yellow line is a problem to return to on S&P. So 59.70 is likely, and I don't have it drawn here, but somebody asked my target on this one. This 59.70 is going to be a very key resistance pivot to have. So I'm taking a stab at bull market here. DD ratio is slightly improved to 0.6. We've been climbing for most of the morning, which is good. I like it, baby. But again, it's going to be crazy. I don't know if this base is out, but I'll take a contract on it. Why not? It's irrational, so I'm only putting one to it, which is fine because, you know, this is a 40-point run. If I get it, I don't need 3 contracts. You guys see that? That's the trick. Irrational markets, I can just play with 1. I need to hold through the volatility anyways. 26 to almost 66 is like 40 points. That's $2,000 a contract. I don't need a lot to risk 5. This is a 4-to-1 trade on this one. Oh, I love it. I love being good at this. See, I know it's not as sexy to wait all morning to get your long setups, but I'm telling you guys, there's an art form to this. And even if I'm wrong, do you guys see that it's not because I did the wrong thing, it's because the market went against me? You guys understand the difference here, right? It's not that I'm wrong because I suck at trading. I'm wrong because the market beat me. It's straight up. It's a boxing match. And you don't know the strength your opponent has when you go against them. And at least I punched at the right spot at the right time. It's like, is the market, and again, all of our pivots predict volume. Here's the volume illiquidity pivot. And I don't know if the market's going to beat me. Everybody here understands that, right? If I lose a trade, it's not because I suck at trading. It's because the market beat me. I didn't know the strength of my opponent. And when I took the jab at the right spot, the right time. Hey, you know, bully, hey, little 1920 style boxing here. Hey, you know why they did this in the 20s? You remember the goofy boxing style they used to have, like this? You know why they did that? Because it's bare knuckle fighting. You know, here we box like this because you wear gloves. You're bare knuckle fighting. I'm gonna tell you, you've ever been in a fight before? I have. You're not hitting people in the face. I'm gonna tell you that right now. That's the last thing you're gonna do in a bare knuckle fight is punch somebody in the face. You're gonna break your hand. It's horrible. And so these guys used to do body shots because that's what you did back in the day. So, you know, you ever get in a fight with someone and you crack someone in the jaw, you're both going, oh God, that hurts. Ugh. I've been there. I've been there. I used to be a aggressive kid. And they used to do this, you know, they used to fight like that. It was all body shots. Never fight a married guy with a titanium ring. Yeah. Don't pick on people with rings. Stance like the lion from the Wizard of Oz. Put him up, put him up. Okay. So the problem is that I don't know if I'm going to win against the market. I'm betting at the right spot. I'm throwing a jab at the right spot, the right time. If I lose, it's not because I suck. I waited for the right time, and now I'm doing okay. Now, the question is just, does the market beat me or not? And the point is, you got to recognize why markets pivot, take the stab, and if you lose, you lose. But if you win, it's because the market went in your favor. You picked the spot that had more power. If you lose, the market has overpowered you. But if you trade at the wrong spots, then you never can make that analysis. I waited for the spot that has high volume. And that's it. So we'll see if I win. Nope. No plan. Survives first contact with the enemy. That's it. Everyone has a plan until they get punched in the face. That's usually the case. John L. Sullivan was the king of bare knuckle fighting. Oh, is that the guy from the memes? The guy with the mustache? That guy? Is that the name of him? A good fighter will punch your own hands right to your own face. Yeah. I feel like if I take one of these business loans, I might have to protect my face from swinging objects if I don't pay on time. You get the phone call. You're late on payment. I am? Somebody at my door. You've been trying to add NZD USD for 45 minutes. Can I help? We don't have currency pairs in the platform, K. On Rhythmic Mobile? Oh, I can't help you with Rhythmic stuff. I don't know. We're not Rhythmic here, so I don't know. But if anybody here has the answer on how to add, was that New Zealand USD? You may know how to do currency pairs in Rhythmic, if you can help someone out. You took my advice in December and you bought 10 Apex accounts at 90% off and realized today you still have them. They're charging you like $40 a month for them probably, or $20 a month for them. The best part is that they still cost less than a full priced Apex account. Wait and use them whenever the market timing is right. I've seen the movie Elevation. I have not. MHP is the level. Above it, you're safe. Below it, you're fighting robot demons. That's the way to put it. So as a trader, the question becomes, I did pick the right spot. As you guys see, this is the correct spot to long from. This is the correct spot. If I'm wrong, again, I'm just wrong. And I have nowhere else to take a stab from. But I have to take the stab every time because as you see, every time it does make an attempt. So the trick is to take the stab every time, because when you're right, you're really right. I mean, with one contract, I can be walking away 4 or 5 grand per account. I'm not at all worried or scared about what I see. And we'll see what we got. But I wait all day for the right play. So I tried my every single time trade here. It didn't work. I tried my every single time trade there. It didn't work. I tried my MHP every single time trade here. It might work. Take the stab, take the loss, take the stab, take the loss, take the stab, take the win. And nothing wrong with that. Again, it's not guessing market direction. I'm just the expert at finding liquidity. I bet on liquidity every single time. Because liquid markets don't crash. Liquid markets don't crash. Liquid markets don't, until they do, but they usually don't crash. Liquid markets buffer a crash. Liquid markets buffer a crash. Liquid markets buffer a crash. We need the pump song. Rich, don't do me wrong, baby. Come on. If I lose, I lose. That's okay. Why did I feel shorter? Oh, my chair was lower. I don't know how that happened. I know, y'all. I'm sitting here like this the whole time. I feel like a small person. There we go. There's Matt's normal height. My chair was lowered for some reason. Sometimes I assume the position better when I'm playing Call of Duty, though. Hey, does anybody want to play Call of Duty today? Y'all at Black Ops 6? Y'all want to squad up? I think after my stream, I'm going to do that after my meeting. All right, we have a gaming channel in Discord. Drop your Steam IDs there. I'll add you. The only part of a stock market you can predict is that liquidity buffers a crash. That's it. That's all you can predict. You can't predict bottoms, tops, lows, nothing. You can predict that liquidity buffers a crash. So I take stabs at liquidity every single time to the long side, every single time to the long side. Come on. Feel the power. It needs spot in 5 minutes. It needs to go highs. I need to break this in 5 minutes. If it's chopping here, it's going to come back down. We need the squeeze. We need people to feel the squeeze. Come on. We need that squeeze. We need that squeeze. Quick. One giant green candle. Let's go. Feel the power. The hype song is doing well. Yeah, we got to play this song every time. Rich, you wrote a banger. The market listens to your song, Rich. We need to pull this at the best times. So I can't, what Rich has handed me is a literal crystal ball. So we can't overplay this song. We got to play it only when we need it. So when we pull this song out at the right time, some of you guys will let me know. Be like, Matt, pull the song out. And I'll be like, are you sure? Let's do it. Because it's like, you know, the monkey finger glove. You get 5 wishes. And every time you do a wish, one of the fingers curls like this, right? You remember from Rick and Morty? Was it Rick and Morty? So like once you get rid of all your wishes, you know, the devil has your soul. We get 5 uses of the song, all right? I need the green candle in 5 minutes. Let's go. And feel the power. Ride that scooter through the haze. Countless days. Oh, man. Oh, boy, I'm back to green. Even this is one contract here. That's incredible. Ride that scooter through the haze. Matt, what's your P&L? Hey, Matt, what's your P&L now? What's your P&L now? What's your P&L now? Make me take like 8 dozen fucking screenshots. Look, I tell you guys there's a method to the madness, and people just want to come see big fat green on the screen. They don't want to wait for it. Look, Daddy don't gotta make money now. I wait for it. When you need a miracle and you call for your one time, that's it. That's it. All right. So the monkey paw has now lost one of its wishes, okay? Rich, you guys can see my... Oh, you want to see something funny? I never showed y'all my wonky hand. I have a wonky hand. So you have 5. You gonna show us how much money you make? Not as much as you do, Adrian. Right here, look. Monkey paw down to 4. 3. So we use Rich's song to win 1 trade. We get 4 more uses with it. All right. You guys don't have a wonky finger, right? Look at like, okay. So like my hand is normal on this side, right? But on this side, you guys see my ring finger, how it's like tilted and it's even like curved right here? You guys know this, right? Like this one right here. Like I can't straighten my hand out. You see how my finger is like completely wonky and weird? That's weird, right? So I have Tourette's syndrome. I don't know if you guys have picked up on that. I literally have Tourette's. I've been born with it. I dealt with it all my life. I'm really good on camera. You don't see it, but off camera, you see it. And my finger ticks and twitches. Like for years, I popped my knuckles for my entire life as one of my twitches. And so with that, my finger is just permanently warped from that's the one that twitches. It's weird. So I don't have the Tourette's that makes me blurt out cuss words though. Although I do sometimes mutter under my breath slightly. I more have the muscle twitchies. And my 6-year-old also has it. Why aren't you short? God damn it, Joshua. So I got this wonky finger, and mostly it comes from like gaming and playing like gaming. So this finger like wraps around the mouse, and it just kind of like permanently warped itself into that shape. So I have this wonky little finger. You like my sexy finger? She always says it's cute looking, but all right. So it's the first test of liquidity. Now again, we're back to where we are. I can long it a little further, but what I'm going to do is take profit on this, and I'm going to wait until we get the break to take a second trade. All I did was retrace this first downward move here, which is a good setup MHP bounce. But what I really want to do is get above 92 to get the rest of that. I'm going to hold off on this to let it try to test again, and I might rebuild a position here. A lot of times I do this when I'm uncertain inside of irrational markets. I don't necessarily have a good exit target here. Nasdaq, you kind of do. Let's open it up. Show you all that. NASDAQ is like trading internal to this little range here. So normally when you move down really quick and you return to that little anchor point, that's usually the first sign of exit. Now, if I get the support at DD band, I'm back on the long. So wait, iDoc, you should be working. What are you doing now? Are you in Cabo for work? The other week, she's like, I'm at work, guys. And here's a picture of my feet in front of a beach with the Mai Tai, like Hawaii, California, Florida. Work. I want your job. When you will be late, you won't miss it. LOL. Ali says not bad. What Ali say? Hold on. You have a question. Clearly the platform you use is helping you become profitable with a high win rate. Do you think it's more people use it, the more bigger the funds be able to fade people? No. Yeah, good question. That's always a viable question to ask. Because like the market is this like dynamic thing, right? Whenever you do something, you change the market. And so it's like, there's a word for that. It's the uncertainty, Heisenberg uncertainty principle. You never know the speed or momentum simultaneously. Oh, like never know the momentum or the position of a particle at the same time. Because the more you know about one, the less you know about the other. You affect something by observing it. So at the market, you actually affect it by participating in it. The market isn't just this static book that we're reading. We play in it as ghosts on the side. If I do anything to the market as the butterfly effect, I can change the market's direction. So all the activities of us doing it, it's like if I didn't do anything, the market would look a certain way. But my one contract or two contracts I trade, the market will look different because of my participation. And you never know your effect on it. So you're right. This is a good question to ask is, does the participation of everyone longing at a hedge pressure or shorting at this thing change the market to where there's predatory behavior, where firms are trying to squeeze you out or push against it? Lucky for you, the market doesn't necessarily work that way, because while you are right, they don't know that you're trading there any more than you know they're trading there. There's no magic data feed that a hedge fund gets that we don't get at Rocket Scooter. As a matter of fact, we get the same data feeds they get, if not more data, because of our options data that we have, and we built this thing that parses it a certain way. So the idea is that nobody has more information than you for the most part, except for the central exchanges. They may have a little bit more knowledge in the order routing, like Citadel places may have a little bit more knowledge of liquidity than you do, but it's slightly more. But it's enough for them to make a lot of money. So there's nobody out there that knows everyone's parked or behaving at a certain place. You'll be able to see tremendous amounts of order flow somewhere, but as you see, the tremendous amounts of order flow already exist without us participating. So without me doing anything, there's the order flow there. So it already exists. Does our drop in the bucket change that effect? But the thing is, that effect has nothing to do with retail traders or whatever jumping at the same spot and making trades. Retail traders, it's not really what's making that volume happen. That is the net sum of everyone's hedging. So for that to change, the overwhelming majority of people that are trading, here's a bell curve, will have to change what they do. If people on the left side or right side of the hedging bell curve are hedging with different models, they're all going to kind of cluster the majority of their risk at that one spot called hedge pressure. And so if that one spot is where that volume is, you're going to need the bulk of all institutions to kind of change what they do all at the same time for that to no longer be a pivot. Lucky for us, they're not going to change what they do. Delta hedging and gamma hedging and Greek hedging are all theta hedging, are all principles of hedging. The best you can do is utilize those things to hedge with. So there is no alternative to them. If that makes sense to you, Ali. The idea that oh, fuck yeah. There it is. All right, now there's the liquidity test. There's a breakthrough on hedge pressure. I've already closed my trades though. So let's get that test. Do I? Do I? Just one? With the 10-point stop, why not? Just one with the 10-point stop, why not? There's a liquidity test. we test the liquidity? It's Donald Trump talking. Hold up. Hold up. Somebody saying something before I go in here and do something? Hold on. Is that a video? Okay, there's a liquidity test. That's it. With a 10-point stop on this. Let's do red line off of this. This is a nice little pop. Oh, let me double check on S&P. Hold on. Just one. Come on. Is that it? Okay, let me do the impact here. Yeah, so if I ever say anything on stream that like get me canceled or banned, you can just tell everybody, hey, leave him alone. He has Tourette's, okay? He didn't mean it. It's a true story. Let me watch this off to the side. I'll come to my defense. Like, trust me, bro. Have you seen his wonky finger? He's not making it up. He's also weird and on the spectrum, so just give him a chance. That's cute. You don't talk about crab on finger. And as weird as I am, I still seem to get chicks, so that's kind of nice. Have y'all seen my girlfriend? She's hella cute, and she can do so much better. So I don't know. But I guess until she realizes that, I'm gonna stick with it. You're also not normal. Yeah, dude, she's fucking weird, you guys. I'm not gonna lie. Yeah. Honestly, yeah, if we didn't find each other, we both would probably just die alone. This is very true. Take a look at my girlfriend. She's the only one for me. All right, here's the test, though. Liquidity test. This is very quick, and it can lose very quickly, so we're going to watch this one. I did want to take a test on the bounce. Let's see if we get it. One contract. I'm only risking a little bit. I usually take the liquidity test. Now, that one was super quick. I kind of like watching on a tick chart from this point to get really, like, divey in on this sort of activity. Let's put her up. I like to look at the speed of the orders, too. That's what's really good about a tick chart. So when I'm honing in on my pivots, a tick chart is the way to go. Get you that good read on the market. Now, again, you're going to see flurries of orders for, like, the size of the orders coming through. It's going to, like, shoot at this very quickly. So keep a tick chart open. When you're eyeballing pivots in irrational markets, good to keep a tick chart open. iDoc, how's your work going? How's the conference? Aren't you like in a class right now? Are you in a class right now listening to me with your AirPods on? You snuck away. Hey, don't forget to go stock up on food before they take it away. I don't know if I'm going to use Rich's song just yet. I don't think we can. I don't think we want to waste another monkey paw. We get 5 uses of the song. So remember, guys, we get 5 get out of jail free card uses of the song. When I play the song, the trade wins. And we got to use it at the right spot. Now this time we use the song to save the market. We use the song to get monthly hedge to pivot. There's that test. Now we did already test DD band once. Let's hit it a second time. Remember I made this trade a couple days ago? Not the best here. Come on. Little bouncy bounce. I honestly really can't explain where a lot of this bear selling is coming from. I have no clue. I don't know what the perception of the market is other than there's just a lot of profit taking. And I think it might stem from the fact that what Donald Trump is doing is really making people worried and scared about the fate of a lot of companies and their ability to adapt. That's just my thought. Again, one contract ride or die on this one. I'm way up ahead. If I lose $1,000, I'm still greening all the accounts. We like to get that pop and test. I probably should have waited and given a little bit more time to test out before I tried this, but we should be all right. Although this can probably just continue to sell from here. 11:30. Got that second test, the DD band coming up in just a second here. Let's see what comes of that. Get one more try at this. So that liquidity test, and when I tell you, boy, you always test that liquidity. That's how it works, that liquidity test. Look how strong our DD bands are. This by itself is like really worth its weight in gold. This little equation right here is so cool. Like, I love this band. I love this thing so much. No, I don't like this little skedaddle right here where the market's just like gracefully like it tested and it's going to reset down to here. Get a little red candle off of here and see what happens. I don't think it's going to rally from here. I don't think it's that strong. This pop, I don't trust it so much other than a test of liquidity. If the market's continuing to slide down, we're probably going to get a crazy little candle like this. And we'll see. Bull flag, trust in it. Do we trust in the flag? Big player, just one big player in a couple of things. This is not, it needs, I jumped in a little too early on that, but I took a stab right at DD band, like I always do. It's got to test, like if it goes up there gracefully now, and and hits it and then starts to pull down, I'm done. It needs to push through with some strength. Like, we need that strength soon or I'm out. So my real question now is what do I do if it falls to there? Do I add? Probably not. What do I do if it pops to there? Do I close and break even and then save what I have? So as of right now, it's gonna span some kind of range, either there or here. I think down before up, but we'll see. With the state of where the market has been trending today, I think down before up is likely a candidate. Little short covering right there, but we want to see that move around. Like I said, I do like these MHP tests. It would be strange and extremely bearish for this to make its way all the way back down to there, and it wouldn't likely bounce a third time without an overshoot first. Like, if it falls through here, this market's dead in the water and like will die today. So that's the real case. DD ratio is actually back down to 50. That's a little alarming now. To see that we're fighting that edge there. And I don't know which stocks were doing it. I kind of want this ratio to be greater than half. And again, I always err to the bull side when it's on the edge. QQQ, it's in the same boat. They're all they look exactly the same today. Like I said, I always try to bet on liquidity. Now, again, I got in a little too early on this. Usually I let it go a little quicker than come in, but this was a really clear spike that I just didn't want to miss out on in case there was something that I missed. And I looked at the news and there was nothing. It just was a quickie short squeeze. This is a one big player. So normally when the markets move like this and bounce before I hear the news, I jump in just in case it's the good news. Because when the market gets super liquid like that and passes liquidity tests, I'm okay for it. Price is up, options are down. Resilience is just for gap fill. Yeah, Adrian. Resilience is negative. So what that tells me today with negative res is that my actual high of the day is likely there. So if I get lucky and if this market runs, wherever it goes, that's like my exit target that I'm planning for. R&R is great for the trade. If we hold DD band, we're pretty good. Now 59.70 is a yellow line, which is also bad resistance. If the market moves up in stages, there's a lot of resistance right now. There's there. It's really hard pressed other than this 92% to say that we're going to break any of it. I'm going to bet that we don't really break any of it. So I am taking the stab here just in case with something small. That's why it's small. Normally when we're out of the, the bad zone and back above DD, I usually hit it normal or medium. That is less than half. So I hit it with usually a medium trade, like 2 or 3 contracts. But because my resistance targets are right nearby, I don't have a lot of faith that this picks up a lot of bull momentum today. NVIDIA retesting MHP. Let's go. Hold on. Let me double check my... Hold on. Did I get a phone call today? No, I got 90 phone calls today. Do you want a business loan? No, that's okay. No, you want a business loan. I don't know. Yes, you want business loan. He's not question. Paperwork signed. I didn't sign anything. Yes, you did. All right, guys, don't forget, if you want to learn this stuff, we have a 20-day boot camp. It just started. You can catch up and watch the videos at any given time. Through the end of February, it's $20 for 20 days for the classes. You literally can watch every video we do, come to them live every day for about 1.5 to 2 hours a day. I train on each one of these topics, and it's $1 a class. It's probably like the best thing we've ever done, and I invite you guys to all check it out before you go out and ever learn anything trading. Learn with us first. There's a reason. There's a reason that people kind of stick around here, you can read the reviews for what people have said about the courses. I just always like scrolling down to the last one we said. Rockseer's completely changed the way I look at the markets. Starting to finally see success in trading. Again, these are testimonials from people. I didn't tell them to say anything. I didn't pay anybody anything. Legitimate customer experience, and it tells you what they purchased and when they left a review and who they are. And a lot of these names are people from chat. So feel free to read it. This course that they buy is only $20. It's not like an income generator for the business. It's just to introduce you to what we do. And you can read all the 5-star reviews people do. I'll give you the link for it if you guys want to check it out. There is literally thousands of people that have taken this course. And it's the coolest thing that we do. It trains you in all things that I'm teaching you now. These little tidbits of what I'm showing you. All these little position sizing tricks and whatever. Like, why am I in one contract now? Why did I try to chase along on that break on the rebalance at green? Why am I sweating right now? And why do I think I can take another $1,000 of drawdown? Why do I think the market's not likely to rally from here? Why am I still taking the bet anyways? What am I betting on? Why is this the high of the day? Like things about this that I always am trading around these understandings. We try to teach you that in this boot camp. We love you guys to check it out. By picking up phone, you agree to business loan. He's like, we have a recording of your voice. Do you agree to business loan? Yes. My name agrees to business loan. There you go. That is your name, isn't it? I see a little momentum. I don't like it. That trade options. I have before, but not all the time. Just on occasion. So Matt, you're a good teacher, Barry. Thank you. I try to get people. Like I used to teach at the University of Houston. I taught engineering courses, and so I'm really like adamant on training people. You guys remember my story about Tricky Mickey and the Titanic? Y'all remember that? I'd so modeled my style after him. His job was to make you think. Because in the real world, that is what your job is to be actually, as an engineer. You really have no other job but to think. That's what they pay you to do. They pay you to think and to figure stuff out. The answer is not, let me go find the answer, because there is no answer. Your job is to create a problem and solve the problem. Identify some kind of thing, build a problem around it, and then solve it. Like the Titanic thing. He was like, when did the Titanic sink? And you had the actual question was design the problem. That was the trick. If you realize you can do that, you can design a simple problem for yourself to solve. And I did, and I aced the test, right? But the thing was that I aced that part of the test. The multiple choice fucked me over though. So the other part was that if, you know, the idea is that you're just trying to solve a problem. And inspiring people to think and think critically and think outside the box by guiding them to a question and then having them struggle to answer it. And then what you do is you repeat something similar, but you throw a curveball. So each time you drive a little further into someone's understanding by continuing to challenge people. I've always made the classes that way because you're not trying to train people to learn something. You're trying to train people to be thinkers on the fly. Use the tools you have at your advantage to solve the problem in front of you. And that's such an, like what you guys are learning here from me trading is teaching you like how I was trained to be an engineer. This is literally what, where my engineers in this room here can say like, you guys can totally relate. They'll tell you the style, the approach of trading is literally what engineers are trained to do in our job. This is like what it is in school. This is what it is in the industry. Google. Yeah. What kind of engineer do you guys are? Anybody down here? What's your degree in or what's your specialty? The idea is like, what's the evidence? What's the problem? You know, what are the risks of my decisions? It's always like about that kind of risk management level of thinking. You're a software engineer. Yeah, that's engineering. Biotech, Lee. The approach is very similar to school. It's like root cause analysis. Like, why is something happening? Is there evidence for it? Can we do a test to figure something out? What data do we have? What's the odds of this happening? SWE background, but engineering often makes you overthink electrical, mechanical, electrical, critical thinking. Yeah, they didn't pay us to look pretty. They don't pay us to like give the answers. Engineers don't know anything. That's the best part. We just know how to do stuff and we know how to figure stuff out. In school, all of our tests are open book. We have a limited understanding of science, a limited understanding of math. I mean, usually if you excelled at math like I did, it was on the side. Engineering gave you like a little bit of math excellence, but you know, you really just learn a little bit of everything, enough to have like a toolkit to solve problems. You're like, oh, I remember this physics thing I did one time. Oh, I got this math thing, and let's build a solution here. And like that's kind of what it is like that. And you're gonna have this different like mentality. Engineers don't really know anything. When you ask an engineer a question, they don't really know the answer. They know how to arrive at the answer and create a solution to a problem very quickly. That's the skill set. Most of our books or tests are open book. So it wasn't like I knew stuff, but I knew where to find things. Oh, wait, I need this equation. What was it again? Ah, there it is. Let's put that here. Oh, and this one fact is true. So this is a condition. Oh yeah, what was the condition for that? Ah, here it is. Let's modify the equation here. And then we would like build our answers that way, right? And so none of what we did was like, we didn't know anything. We just knew how to solve problems. And so, Dunkin' Donut engineer. So my thought to people is that you need to teach people how to use the tools you have or how to find and index things and then solve a problem quickly. You guys may not know this, but that 20 days boot camp is very similar to engineering school. I'm a chemical engineer and my sub-focus was in reaction engineering. So I sub-specialize under my chemical engineering plan. So I learned about reactor design and economics and catalysts. That's like all the stuff that I did. And I almost went to grad school, you know, PhD, all that stuff was like my original plan. Or the plan they had for me. My head of my department really wanted me to go get a PhD and work for him. He egged me on I did research for him for years and he egged me on like all the time. He's like, hey, you're gonna work for me, right? You're gonna be my PhD plan. I was like, yeah, I think maybe, I'm not sure. He's like, you know, you want to. So I almost did. But you guys are going through mini engineering school. The way you teach is about teaching people the skill set they need to have. And it's like actively tricking you into thinking. It's not like, here's the answer, do it. People are like, so wait, what's the indicator? Why are the classes an hour and a half long? It's not because it takes that long to learn something. The class length is the treat that gives you that entire focus. Trust me when I say one of my entire tests was on Bernoulli's equation, which is the equation that relates basically pressure, velocity, and height and gravity, like forces and fluids moving from point A to point B. Okay. A fluid will move a certain distance under a certain pressure drop and under certain height changes. It's an energy balance around a fluid. That's it. You squirt the water hose. How far does it go? Fluid here. How far does it move? It's like, that's kind of like that's what the class was about. And you learned one equation, but then you spent 3 or like 6 weeks between your midterms practicing 1,000 ways to use that one equation. And it was like, the goal is that here's the equation. It's super simple. Literally it is. That equation will tell you if you have like a U-shaped fluid in a pipe and you have fluid this high and this is sealed at the top with a vacuum, how much airspace do you have in the fluid? Oh, that's kind of cool. All right. Here's another question. You have a shoebox with a hole in it. How fast does the Titanic sink? It's the same equation. It's so cool, like a million ways to apply yourself, right? Anyways, here's the one guide I want to see at this 59.50. That's my last spot to take for this DD band. If it starts to fall from here, I'm out. But I did want to see this recover and hold. And again, if the bull side doesn't take out, I'm just going to close out with profit. Knowing, doing, ways of being to drive it all. Yeah. So the goal is to train you to think. And the classes are designed to guide you into a thought process. It's not just like, it takes an hour to learn this thing. It's here we're going to learn this thing and we're going to practice it. And as we advance through the courses, we practice previous techniques, right? And so the goal is to get people thinking. Now, again, we're not picking up any bid here. This is a little crummy. This is my final spot to be playing in this level. So over the 20 days, you'll come out of that thinking about life differently. You'll be better at everything you do, not just, you know, I can't promise you to be better at trading. That's like against the law to promise you success in trading, but I'm going to promise you success in everything else that you do. When you leave our courses, you will think better than everyone at your job. You will think better than everybody that ever knew you, your friends. You'll think about life differently because you'll learn what it took us 4 or 5 years in college to learn is how to be an engineer, how to solve problems critically, and how to, with limited knowledge. You may think like my memory sucks or I can't memorize shit or I'm terrible at math. Don't worry. You don't have to be good at math to do this. You just have to be good at math to create a trading platform to do this. Let me do the math. For you, it's all about making good investment decisions. Your skill sets are fucking addition and subtraction. Get over it. Trading's not hard. Your decision is the hard part. Trading is easy. You push a button and that's it. The act is easy. You just push the button. The decision making is the hard part. So people need to learn how to think right. Manage risk, and you're managing risk in real time. I'm managing risk right now. Why do I have a line right here? How did I draw a line right here 30 minutes ago, and that's the bounce point that I said I'm holding on to? How accurate is that? Did I add to my risk? No. Am I probably right? I don't know. Is it a good risk to take? Yeah, the R&R is amazing on this trade. Am I willing to lose X amount of dollars? Yeah, I will lose $1,000 if I'm wrong. I will make $4,000 if I'm right. I'm already up for the day, so I've got 3,000-ish, 2,000-ish per account to play with. Okay, I'll take it. So the point is that we want to train you to think like a better person, to be a better thinker. I give you all the tools to trade with, but that's not the golden part of the classes. The 5-star reviews come from the process. That's what people really enjoy because it's not like any other thing out there. It's not a here's the stuff, learn it. It is a gruesome training process. It's long. It's a boot camp for a reason. It's not just called boot camp to like make it sound cool. Those of you that are in the classes, do you feel like even after 3 days, because we've only through 4 classes, do you feel like you're thinking about markets differently? Like your approach is radically more affected? Like you have so many more things you consider and you're taking a little bit more time in your trades. You're thinking more thoroughly rather than let me just push a button. Because what you guys do is you push a button, and that's the easy part of trading. You push the button. And that's about where you limit your decision making is up or down. Okay, up, push the button. Okay, here's a stop. Okay, let's just see what we get. And that's kind of what you do. But you haven't really put a lot of thought into going further into your understanding. Even if I tell you like a whole class on just coaching you on why something works, and then for 3 seconds, here's the equation. It's the understanding that you're diving into why something works to let you know about the complexity of the market. So you're doing a lot of complex things that I'm training you on that you don't know are that complex. So you're able to do a lot more with very little. Like your thought becomes deeper, your application becomes deeper, better. Understanding there's a reason for that. There's a theme of the market, and the theme is that liquid markets don't crash. And every time there's liquidity, I always take a long trade on it. Always. It is a very profitable decision. And the idea is we teach you 1,000 ways to discover liquidity, just like in engineering school. Bernoulli's equation can tell me how far fluid moves on a ramp. It can tell me, well, not really because there's friction, but the frictionless, Bernoulli's the frictionless version of the energy balance momentum conservation equation of things moving, fluids moving. Bernoulli's the frictionless. If the hole's big enough, or the pipe's big enough, there's no friction anyways. One equation that can solve a million things. And here's the equation. Find liquidity and fucking long it for success in the stock market. That's it. That's the secret to trading. Find liquidity and long it. That's it. It will work most of the time. So then the art is, what do you do when it doesn't work to survive? Because if it works most of the time, your trading goal now is just to survive. You got it? You got it, guys? You got it? You got it? You got it? Your goal is not to predict the stock market. Can't do that. Your goal is not to guess the direction. Hit or miss. I get it wrong a lot of the time. I get the direction wrong like half the time, but I win most of my trades. Why is that? Well, it's because getting the direction right is not the source of winning a trade. Do we got it, guys? Do we got it? Do we got it? No. It doesn't matter bull market or bear market. The goal in trading is a principle that is absolutely true. It's that liquid markets don't crash. Liquid markets do not crash. I proved that 1,000 times. I need to write a book called Liquid Markets Don't Crash. Liquid markets buffer crashing. If the market sells off and falls, liquidity will stop the burn for a little bit. And so every time market rallies is from a period of liquidity. You just don't know which one it is. This is a liquid test that failed. This is a liquid test that failed. But this was a liquid test that won. And here's a second one that's likely to win if I win. Whether I'm right or wrong, it doesn't matter. But what it means is you're trading from the right spot. And that's the important part. It's not that I'm just trading. I want the direction to go up. I'm betting right now that 59.64 is a liquidity test that's going to pass. And this is a very profitable decision that I'm making if I'm right. So liquid markets don't crash. They can become illiquid, but liquidity will always buffer selling every time. A liquidity pocket is a buffer to selling right here. This is a liquidity pocket that I took a long stab on. You guys remember that? Does that make sense, guys? So the goal is in trading is to find liquidity and take the long trade. That's the easiest way to make money as a trader. Now, again, that's the hard part, is to make money. It's not easy to make money, but it's the easiest way to make money. It's to find where liquidity is and long it. That's it. Don't short it, long it. Market is not a bowling ball that's ready to fall out of the sky. The market is a helium balloon that you're pushing underwater, that once you stop pushing, it's ready to float back up to the next liquid spot. So the goal is that you're betting that people are going to stop pushing it lower when markets are liquid. Now, again, I could be wrong on this trade. It doesn't mean I'm right. But I take stabs at areas of liquidity because it's the right thing to do. The Apple flow is drilling into the core of the earth. So we need merge. Hell yeah. Risk management. Don't be emotional. Ryan says, don't overtrade here. Your stops in place. Stop loss area. Take profit area limit. Oh, that's all the stuff you need. All that stuff. You nailed it. A new trader, if you're here, start trading MES, would I recommend going into learning and using order flow? Learn Rocket Scooter because we're the next step above order flow. We predict order flow instead of show you order flow. This is it. And I give you the link for it. We have thousands of people that have gone through our boot camp already. This is, hold on. These are the reviews. Let me go back to the top. These are all the people that have gone through the boot camp. It's all 5 stars. There's something that we teach you when it comes to order flow is very useful, but try doing it a step ahead before you learn order flow. This is liquidity. The step discovering liquidity. That's what we teach you. Predicting volume is like a low key way of saying it. Predicting volume. Our style can predict where volume will be because they're liquidity tests. There's a liquidity test right here. There's volume. There's a liquidity test right here. There's volume. And so the order flow is like when you get there, the order flow machine is like ding, 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 ding. It's going up. There's a lot of order flow. There's a lot of order flow. And it's here, which is good. But isn't it neat to have that level drawn like at the start of the day, right? Predicting order flow is the next level of order flow, which is an older technology and understanding. So we are pioneers in the flow area and the gamma exposure worlds. So the stuff that we create is in that same ballpark. 314-ist, pianist. I guess that's pianist, right? And our class is $1 a class. So it's designed to be super cheap because we want you guys to have easy access to it. And I posted the link. So come to a few classes, especially today. We start at 3:30. We'll be live on Zoom. And you'll learn a whole hell of a lot there. How do you convert pricing on SPY to ES? So it updates. You have to do it in real time, so it's really hard to do. What you do is you have to anchor from a certain level. So you take like current price, ES current divided by SPY current, right? Like the current price. So you can go to like Excel, right? And you can rip this data from Thinkorswim and have it input in real time every second when it updates, or 2 seconds. The actual prices, and it creates a fraction. The fraction is a kind of equal to 10-ish, but it changes in real time as the two trade like this. They don't like, they both go up, but they wobble around. So the fraction's never the same. And so that fraction, then you just basically cross multiply. The ratio of your two pivots will also be in the same fraction. So if I want to convert DD band, which is a futures thing, let's put it on the top, DD band, futures to a DD band SPY equivalent, you cross multiply. So you put the SPY there, put the F there, and so now you divide by the fraction, you're cross multiplying. So essentially it's like A over B current equals A over B calculated. So you cross multiply for the one that's missing. It's simple conversion. But yeah, if you do it in real time, the value changes for a converted target because the two things don't trade. The fraction's never the same. It's always roughly equal to 10-ish, but it's like 9.95, 10.03. It bounces around. So if I were to convert 5965 to SPY, it would look like this. Like it would be there in the ballpark, but when you get to it, like every time the calculation updates, if you were to convert one to the other, it would do this. Every second, it would just be dancing around. Do you understand this, Jay Mooney? Like when you convert, the conversion's always a moving target. He's asking how you convert a static number in futures to SPY. All right, is that what you're asking? Roughly multiply by 10, roughly divide by 10, roughly. But it's never going to be the same because 5966 divided by 10 is 596. And that's way out of bounds here. The ratio is equal to 10. You have to cross multiply. So what he's saying is if you have a calculation in futures, what's the calculation? Let me just do it real quick. I got Thinkorswim open. Let me show you guys something cool. Hold on. Let me show you how to do it in Thinkorswim. You want me to do it for you in Thinkorswim? I'll show you something cool. All right, open Thinkorswim. All right. Oh, let me close this. This has got secrets in it. Oops. Okay. All right. Oh, crap. That's the secret to hedge pressure. I accidentally revealed it. I'm just kidding. I'm fucking with you guys. All right. Everybody's like, clip it, clip it, clip it. Okay. So what you can do is you can go over here. Secrets don't make friends. All right. Okay. Go here. Yeah, the secret to hedge pressure is in this spreadsheet, by the way. If I just click these tabs. Yeah, so by the way, guys, hedge pressure requires a database level of information to calculate hedge pressure. One number. That's it. One number. It's ridiculous how much data goes into calculating hedge pressure. It's not. Shut it down, guys. All right. So here's what you're going to do. All right. You're going to open Thinkorswim, and it should automatically add the add-on to you, but you're going to use this function right here. And you're going to do equals this. Literally type this in. That actual function, this RTD add-on or add-in from Thinkorswim, and it's a .NET thing. It allows you to connect in real time to Microsoft products and open like an internal data transfer. So essentially, with Thinkorswim open, hold on one second. Oh, hold on. Oh yeah, I had my 11:30 meeting. Okay, so this allows you to connect Thinkorswim. As long as Thinkorswim opens, it updates. Net change of SPY. So there's like the last, and you can do like last value of SPY. Sorry, not net change, last. And now I'll give you the last value of SPY. Sorry, that's the wrong one. Here we go. You'll take a loan, yes. That was actually Big Daddy Max. You guys know Max Options Trader? Max is cool dudes. Cool peeps. All right. That'll give you the equation for SPY. You can do the same thing for ES, and here's the ticker for ES. And then what you'll do is you can be like, okay, like futures, futures pivot. I don't know. And I'm going to type in something, DD band 5964. And then we're going to say SPY equivalent. And then, oh, hold on. Did I fucking forget this thing again? Damn it. Hold on. I need to pay more attention to my phone. Hold up. Whoopsie. And so you're going to go here and you're basically going to do the same thing. So a futures pivot divided by a SPY pivot is equal to the fraction. So the fraction, if you know, is equal to, and I'm going to prove to you that this shit dances around, this divided by this. So what he's saying is that. Oops, that's the wrong. Okay, so everybody see on my screen really quick, right here? SPY, ES divided by SPY is never 10. That number changes in real time. We all see this so far? Just let people know it only works on Windows. LOL. Y'all see that, right? Okay. Now, with that being said, what if I want to convert DD band, right? And somehow Excel decided to crash to screw you over. All right. Well, I'm not going to reopen it, but you see the difference, right? Hold on. Freaking. So weird. Hold on. Let me reopen it one more time. Excel just decided to randomly crash because Excel is stupid sometimes. There we go. Good Lord. Okay. Cancel, close, cancel. Okay, we'll do this really quick for it. Literally reveals hedge pressure to the world. Okay. Like my mouse is moving slow. This is so weird. Okay, anyways, the SPY equivalent. So if it was like D band here, you want to make a SPY equivalent. It's basically equal to this divided by the fraction. So your DD band equivalent will be moving around 59.53, 59.55, 59.54, 59.55,